Just get the stream link posted and then I'll continue. Okay, so let me just draw out something. Are you able to see my screen?
Yeah.
So this point right here that I drew a circle on, it breached that pretty strong, right? But this resistance point way back here, it looks like it bounced off of it, right? It wicked, but it has bodies bouncing off of it. So bodies are really strong. I think this is going to probably continue upwards to that resistance point and then start a nice downfall. That's kind of my guess. And it
Might be a couple of weeks though for that, huh?
could be, yeah. What's the expiration on that contract?
Well, I wish I would have bought it for longer, but it's next Friday, 5th.
Mm, yeah, that might be might not be able to get out of that one. Hmm.
Yeah, I thought it was something I was gonna be able to just get in and out today, and then I kind of got stuck holding it.
Yeah. So I always recommend buying a lot of time, right? Um,
Right. Yeah, I know I've heard it 100 times.
I'm not sure who alerted that one. I did hear somebody alerting it though, or I've seen talk about it. That is.
Yeah, they did put swing in all caps, so I mean, I should have bought some more time on it.
Yeah, I think it's probably in the future. Um, you can't go wrong with leaps. You just can't. It's it's a win-win the way I see it. Like it's almost like buying shares. If you get a year out, if you got the money to get a year out, it's almost like buying shares. Like at some point in the next, month or two or three at most, you're going to see profit on that position. And that's actually something I wanted to talk about during this lecture tonight is leaps. Um, hold on 1 second. Yeah, so let's see. I'm getting messaged everywhere here. I'm sorry. Um, I bought leaps for Apple 2 weeks ago. It cost me $1,800. I sold it yesterday for 60% return, which was $1,100. So I know people may not have the money for leaps, but I'll guarantee if you choose the right stock and you're getting a leap off of support and it has low IV, it's going to pay. I could almost say 100% guaranteed that will happen, especially if you get a year out. So if somebody says I'm swinging XYZ, go buy a leap for it. Because, they could say, I'm going to swing it in 2 to 3 weeks to swing. I wouldn't buy a month. I wouldn't buy 2 months. At minimum, I would go for 6. Because there's no telling how long it's going to take for that swing to actually come to fruition. It might happen tomorrow. It might happen in a week. You just don't know.
Bro.
You said a leap off support with low IV.
Yes.
All right.
And was that your only question?
Yeah.
Okay.
Hey, Hostile. Have you gone over a run yet? Or UN?
I have not.
I just hopped on.
I haven't.
If you have a moment,
Sure.
thank you.
So I think I like run. It definitely filled that gap. So let me zoom in closer. See this gap right here? It made that gap at this time, my little red arrow right there. It made that gap and filled it. Now it's starting to come back up. And to be honest, I see a cup and handle here as well. So this might actually break out. However, the momentum is saying it's switching back to bearishness. MACD is showing it in bearish territory, but coming back up. So let's see, is there any support right there? Yeah, there's a little bit. So let me draw a line. So you got a couple of points that are acting as support. An actual support area, which is this circle, and then a resistance area acting as support, which is this area. And I could probably argue that this whole entire section of resistance is acting as support. So, I mean, I think we could totally see this come back up. What is this like a solar company or what is Sunrun?
Yeah, it is. It's a solar company.
Okay. Then yeah, I mean, I think, I mean, solar has just been killing it lately. I think this, I would say this is potentially a safe play to be bullish on. But there is this lingering doubt in my mind of the market reversing. And I'm not sure how solar stocks are going to react to that. I just got a feeling the market's going to go down soon. I mean, I've been calling for it February time frame, no specific time in February, but sometime in February for the market to start going downward. I mean, I think we already have seen the SPY. Yeah, the SPY's. I think the SPY is going to start coming down too. I mean, it hit this 385 high just recently, and then it sold off. Had a nice pump back up, but that's a lower high on the SPY. So I expect to see if SPY breaks 370, we're going to see it come down to 365 and then ultimately 360 or so, maybe a little less.
Hey,
And then I,
Hustle, could I ask you a question?
sure, 1 second though.
Okay, no problem.
Let's see. Purizana, was that the only question you had for run?
Yeah, that's all I had. A couple of us are on February calls for the challenge, Cal's challenge. So I was just trying to see whether I should average down or hold or, um,
I
but
got you.
I think I'm gonna hold for now and see. I'm not really. I bought more stocks than anything, so I can always wait them out. Worst case.
Yeah, that's a totally acceptable idea. For run, I think we should see it show some profits. To be honest with you, because it did fill that gap, and it's basically bouncing off that support area pretty well. So I would expect to see some potential strength in the near term on that. So if you do see profits on it within the by next Wednesday, you should take it, in my opinion.
Yeah, for sure. Thank you. I appreciate it.
You're welcome. Okay,
Hey, the stream is not working on YouTube.
it's not. Hmm, let's see what's going on.
It says it's offline.
All right, hold on. I'll have to reopen the stream then. Stop streaming. Every once in a while, I get some hiccups on this thing. It doesn't. YouTube isn't the greatest, unfortunately. Okay. There we
Real
go.
quick, what did you say about run Wednesday? You said if you don't see profits, or what did you say?
If you see profits by Wednesday, I would say to take them, because the 19th is like 2.5 more weeks after that. So, I mean, Theta Decay is gonna start really hurting that position if you hold it through the following weekend. So not this weekend, but next weekend. If you hold it through that, Theta is gonna really kill that position, in my opinion. So I would try to take profits, even if it's only like 5 or 10%. If you see Monday, Tuesday, Wednesday, some kind of return, I would probably take it. Like I said, I think we're gonna see a downturn coming pretty soon, the next 3 weeks potentially. Let's see, Arctic Bull, you here? Well, Arctic Bull asks maybe 15 minutes ago to look at Lee and Run, but just looked at Run, so I'll take a quick look at Lee. So Lee, this is EV Chinese company. I think it's got potential to I don't know. It has potential to go up, but it needs to break through the 35, 36 area to really see some kind of nice change in price here. But it's just been kangarooing around. It did bounce nicely off support at 30, I would say. So let me draw a line for that pretty soon.
Hostel, they just got upgraded by Morgan Stanley.
With today?
Yeah, after hours.
I see. So, I mean, analyst upgrades, I'm not really sure how much water they hold, to be honest with you. I kind of take that stuff as a grain of salt, especially the bank when bankers are doing it, because we all know bankers are manipulators. So we all know. We'll see what happens with that, though. But I do like Lee. I'm actually in a CSP for Lee, so I do believe that we're going to see some upside on that. But my position is I'm not too worried if we see downside because I can roll, no problem. All right, let me see if I can get through these app messages before I open the floor back up to everyone else here. AK Bar Shocks, are you able to talk?
Yeah, yeah.
Okay, ask your question in here, please.
I was trying to know, since they are about to sue Robinhood, I don't know if I have to sell all my stocks and move to another, or just wait.
Well, regardless if Robinhood gets sued, I would get off of it anyways. I'm a big
Yeah, but I
proponent
have
for.
some stocks, like some are losing value, so I mean, I'm at a loss, so I just want to wait so that at least break even, and then I sell, close all my positions.
Yeah, I wouldn't worry if they get sued. I mean,
But some people saying like they want to take out from the app store, so I don't know. I was worried about that too.
well, worst case scenario, you could transfer the stocks over to a different broker so that you can maintain that position.
Oh, okay. So don't worry about it for now, right?
I wouldn't worry too much about it. I mean, if they do get sued, it's going to be litigation. It's going to be time. I don't see them getting dropped off of App Store anytime soon. I mean, if they do, you'll hear about it before it
Oh,
happens. It's not just going to be like, oh, you wake up tomorrow and it's not on there anymore, right? So you'll have time, I think, to make a decision on getting off of it and transferring to another broker. I mean, if you're really worried about it, maybe go ahead and do that. If you've got, I think 2,000 or 2,500, you can transfer to another broker and they'll cover the transfer fees.
well, I have around 40 something, so that's why
40,000?
40,000. Yeah.
Oh, you should be totally fine to transfer over then. I
They
would go
don't
ahead and
charge
do
fee
that.
for that,
No,
or they
they
do?
do, but they'll probably reimburse you.
Oh, okay. Cool. Thank you.
You're welcome.
I had a quick question.
Okay, hold on one second. Let me just make sure that I've. Okay, go ahead. Who was that?
I had a question about your indicator all the way at the bottom.
What is that? All the way at the bottom?
The indicator?
Oh, indicator.
Judge. Yeah. What is it called?
True momentum.
Okay. Thank you.
You're welcome. Nike socks. You had a question?
Hey, yeah, I did. Okay, so I got two questions.
Okay.
So let's just say if the market does pull back, right? And you remember how it was in September? Do you just recommend like stop kind of swinging and just start scalping again and just stick to day trades?
I don't trade that way, so I would probably not bother doing it. I would just go into cash, be cash heavy, and wait
Right.
for. I mean, you could do some puts on some stuff, but I mean, I wouldn't do puts on anything unless it's at all-time highs. To be honest with you.
Gotcha. And so my second question was, all right, so today I was trading AMD, right? And it broke out, and then on the 5 minute it retraced to the 9 EMA. And then that's when I entered. And then after that, no, actually sorry, I entered when it broke out, and then right before it pulled back, that's when I entered, right? And then when it started going up, it had consolidated for a minute, and then basically like my contract was just kind of dying. Oh, is that just because of theta at that point?
No, it's probably implied volatility or bid-ask spread. Theta doesn't really do anything to a position until
Friday.
well, the following day, right? So if you get into a position today, theta is not going to take away from it until market open the next day.
Gotcha. Thank you.
You're welcome. Okay, so Ricky, you wanted me to go over Apple and Tesla. So Apple, tricky. We might be seeing it bounce here at 136. I do think we're going to see Apple hit 150 in the next couple of months at least, maybe sooner. But let's see. I'm thinking of a 50% retracement here off of this wave, its most recent wave. So we're going to start right there to its high. So we're right at 50% retracement. So let's see what happens here. But I mean, Apple, here's the thing I'm confused about. Apple did well on earnings and it's falling. So makes me kind of confused, to be honest with you. We're at 50% retracement off of its most recent wave on the 60. Yeah, 60 days. Let me go to 180. Yeah, I mean we're at 50% right now retracement. So it's hard to say. Like I think let me look at the after hours. I mean, yeah, it's totally bouncing off that 50% level. I need to see what it does tomorrow to really say. I mean, if it breaks through that, if it breaks through the current level that it's at, you know, we're gonna see it probably. I mean, again, I'm bullish on Apple, but short term we could see some pullback. I think. I don't see it falling below this 126 area though. But again, you know, this wave, it makes me think that I just don't see it coming back down to 126, to be honest. I think we might, at worst, we'll see it bounce at 132 or 133 or 134. We'll see what happens though. I mean, I'm just confused why Apple's coming down when it should be going up based off of earnings and stuff like that. So let's take a look at Tesla. I expect Tesla to come down soon. It's been up too high too long. I'm telling you, middle of February, right around February 19th, of the expirations of all these contracts. That's what I'm thinking. Let's see. Yeah, I think we're going to see Tesla come down some more. I'm going to give this one a 50% as well. I think that's what we're going to see. There. So 50% is right around 657.
Wait.
We could see it come all the way down to 550, 540. When Tesla drops, it's going to drop. So be prepared for that, and do not be in a position because you're going to get crushed. I mean, if you've got shares, that's one thing. You can just wait it out. But if you got options, be careful. Tesla is known to hurt people badly.
Related to that, Hostel, would
Mhm.
you consider maybe some June puts?
You could, but the thing that makes me nervous about Tesla is to never underestimate it. Like Tesla is one of those wild cards. I am saying that I think it's going to fall, but Tesla's one of those to totally prove me wrong, and it does it. It's done it before. I mean, when Tesla does fall, then I would say absolutely go for a call leap. You got the money, do it. You're going to make money. But when it's at a high, it has a tendency of breaking highs right after it just broke a previous high. So Tesla's one of those where if you time it wrong, it's going to hurt. So
I like leaps. So I like that you said leaps. I like leaps. It gives you a chance to kind of really forecast out if you're not needing the cash right now. The other question I had, and it relates to any stock, how can someone who's just learning identify if a stock is oversold or overshorted? Like, how can we identify on these charts?
So RSI is one of those indicators that will tell you oversold and overbought. The true momentum indicator that I have on my chart, it's similar to RSI, except the difference is it tells you trend direction as well. So those are probably the best indicators to use as far as oversold and overbought. Now, if you're talking about actual shorting and how much shorting is there versus how much long positions, there's we have a channel called, what is that channel called? Charting and
Charting
commands.
and command.
Yeah, so in there you could type in short vol, VOL, and that'll actually show you what the short versus the long is, right? So I see you typing, or I see someone else typing.
Yeah, I did it.
So if I type short vol Tesla, you see the chart that it brought up, the little
Mm-hmm.
graph. The red is the
Yes.
short volume, and the green is the long volume. Right, so Tesla's actually shorted more so than longed at this point.
Everybody feels it.
Maybe. I mean,
People have been saying this since it was at 495 on December. It was like 495 the end of November, December, and then it took that charge. And everybody thought it was going to collapse after the new year. And so it is interesting. It's definitely interesting. I'm just learning how to read charts, and so I'm just super intrigued.
yeah, these are good things to look at. I wish something was a silver bullet, though. I hate having so many things to analyze. That's why I stick to real basics. I stick to support and resistance, and I do have my true momentum and MACD down there, but they're not really important to me. I only look at those to triple and quadruple confirm what I see or what I feel about a certain stock.
Is that what they call confluence? When you have all the different pieces that come together to make you decide?
Mm, that word is not in my vocabulary, but maybe. I have
Yeah,
to.
that's what confluence is. When you use
Because they
different
say
things to
you
make a
want to have
decision.
like 4 or 5 different confluences. That's what me and this guy at the shop we've been discussing, and he
Yeah,
does forex. And so he's saying you got to make sure you have 4 or 5 different things that you trust before you make the trade.
yeah. I mean, depending on the type of trading that you're doing, I would call it a checklist. I've always called it a checklist. Confluence,
Okay.
I guess that's a new term for me, but I've always called it a checklist. If the
I
checklist
like
checks
it.
out, then your position or what you're trying to do holds more weight. There's more probability in your favor. And when we trade, we're doing options and all this, anything in the stock market, if you have probability on your side, then the chances of you being successful is much higher. And that's
So
one of the reasons
is
why I have the standard deviations, because this is strictly probabilities. This is statistical math based off of
that's the
probabilities.
purple, green, and white lines?
Yes, and well, purple, green, tan, and gray. Now, if you notice, let me get rid of this. Let me get rid of this thing. If you notice with Tesla, it travels in a channel, right? It bounces off this one, and it doesn't really bounce here, but when it does bounce off that one, it goes back up. It's touched here, and it's touched here, basically. So that makes me think we're going to see this thing come back down somewhere down here, maybe somewhere here, right? So if you judge it based off of what it did last time, came close to the first standard deviation channel, went through the fair value line, and right in the middle, it did its bounce. So if we look at that same concept here where we're at, bounce off the first standard deviation channel, come down halfway, we might see it somewhere 650. So that's what I was calling earlier, 650, 660. Right. So I think that's probably where we're going to see Tesla come down to.
Mid sixes.
Yeah, something like that. Maybe get lucky and it wick down below that, and I can grab some shares. Stick a limit order in there and grab some shares at a low price. That'd be fantastic.
Also, what is that that you're talking about that it's bouncing off of? What indicator or technical is that?
The standard deviation channels.
Gotcha. Okay, thank you.
You're welcome. I made a video on that as well, if you guys want to check it out. On my channel, here in the Discord channel, that is. It's pinned, so you'll be able to just scroll through the pins and see standard deviation channels. And I even have a scanner that I set up that will scan stocks based off of specific channels, right? So I'll show you an example. So I can do it off of the second deviation channel, 30 days or 60 days, and whether it be at the top or the bottom. So we'll check out this one. So we'll look at, I'll show you exactly what it looks like when you do a scan for something that is on the second deviation channel at the top. Right, so and I did a 60-day, so I need to be on the right chart. So ooh, that one's actually at the third. Look at this next one. I don't like looking at stuff like that. So here's another one. Second deviation channel. Whoa, second deviation channel.
Do you know if you can get that in Webull?
No, you can't.
Got it. Thanks.
This one's
How
right
about
around.
TradingView?
I don't know the answer to that.
I have this also. This is the new one I'm coming to, TOS. I'm trying to figure out how to build out my chart like this.
Yeah, I think TOS is by far the best, and it's free. It's all free. Like I know TradingView, you got to pay once you get past a certain amount of indicators, and I think they even have like scanners and formulas or scripts that you can use. But you got to pay for the service. I don't, not a real
All of that is
fan of that.
included in Thinkorswim.
Yeah, anything you see me doing here is all free. It comes with the platform.
So I have another question
Thank
if you
you.
don't mind.
You're welcome. Sure.
Hey, okay, so when it comes to like taking puts for something, let's just say if I'm watching something on the 5 minute, right? And there's a clear break of a pennant to the downside. I don't know why, but I just struggle taking that trade. Is it just like a psychological thing, just because we like to see things go up instead of like crash? Or
Ask the question again. I'm sorry, my brain was
so
kind of like the gears were
no,
grinding against each other.
no, you're good. You're good. So what I was saying was like, all right. So I think it was PLTR today, right? On the 5 minute, there was a pennant, okay, and I was just waiting for it to go either way, and it ended up breaking to the downside, but I just didn't pull the trigger, right? But if it ended up breaking to the upside, and like there was a couple candles that continued to the upside, then I would enter. But the same thing happened to the downside, but I just didn't pull the trigger. So my question is like, is that just like a psychological thing, just because we'd rather see like stocks go up instead of down?
It could be. I know me personally. In the past, I struggled with seeing things that I wanted to see, but it's not what's actually there. Um, and,
Yeah.
and it's funny that I said that. I remember actually watching a video of Elon Musk on a TikTok. Well, it was like YouTube's version of TikTok, but I remember seeing him say something like he struggled in the past with seeing things that he had hoped were true, but reality was they were complete opposite from the truth, or complete opposite from what he was hoping, and he refused to accept it. And that's an emotional thing that we all have to overcome. um, you have to, I guess, look at what you're doing objectively instead of subjectively, right? And if you can find a way to get the emotion or get the feeling of I want it to do this away,
Right.
then you can make a more informed decision, I guess, is the right thing that I'm trying to say.
Yeah, I really need to hear that. Thank you, man. Especially the Elon thing, and going back to the emotional thing. In these past few months, I've learned how to cut a contract. Like if it's at a level that I didn't if I didn't want to break the support or whatever. Like now I cut like whatever. Um, but just like you were saying, I wanted to see it break to the upside and not the downside. Yeah, that's exactly what it is. But yeah, man, thank you.
You're welcome. Yeah, I totally I fail at that sometimes, right? I mean, for me, where I fail on that is when I'm seeing big profits, right? And it's like I, I, I was actually successful with it recently. The Apple leap that I had $1,100 in profit, and I'm like, I feel like now pay attention to the words that I'm using. I feel like Apple is going to do well for earnings and it's going to pump. But my gut, in the back of my mind, my gut's like, hey, take the profits. Just do it, right? Don't question it. Just take the profits. You got 60%. You're going to get greedy if you hold this. So I was like, you know what? I'm going to trust my gut on this one. I'm not going to go with my emotions. I'm not going to go with what I feel. I'm just going to go ahead and take the profits. And then as soon as the market closed, and I took profits at 355, mind you, as soon as the market closed, it tanked. Well, I don't know. I don't know if I want to say tank, but I'll show you what it did exactly.
Yeah, it went down like $3 or so, $3, $4.
Yeah, and I would have lost 150, 200 bucks off that 1100 bucks, right? And it's continued downward, and I would have held that. I would have held that, right? I wouldn't sell it now. I'd be like, well, shit, I had 1100. I'm not going to sell it now, right? That's where that greed, that's where that emotion comes into play. So um, there's a thing that I always think about where I don't know if I don't want to get too deep in spirituality, right? I'm a true believer in God, and if you aren't, that's cool. I'm not trying to push it on anybody here, but I'm going to tell you my experience is that voice in your head, that gut feeling, that intuition, that's him talking to you, right? And so I've used that, I've utilized that, and I just utilized that in this play here that I did. Was he was telling me, take the money, don't be greedy, because you're not going to see profits, right? And I listened to that voice, I listened to my intuition, and I was right. I took it, and boom, look at this thing. I mean, it literally, uh, look at this. As soon as the market closed, it sold off, and now it's downtrending, right? She downtrending. Look at that. That's a downtrend. So I'm glad I took the money, and I suggest to everyone here that if your intuition or your gut, regardless if you believe in what I believe, your intuition and your gut are still there. They're still true. They still talk to you, right? So it doesn't matter what you believe, but the fact is your gut and intuition, it's the same gut and intuition that I have. Right? So when in the back of your mind, if you look at something and you see profits, you're like, oh yeah, sweet. And then you're like, should I sell? You know, if you're questioning if you should sell based off of something that's at 50% or 60 or 75% return or 100, that's your intuition telling you probably should. Take it for what it's worth. I think it holds a lot of water and weight. Holds a lot of water weight.
So speaking on that Apple play, because I was in one of these as well, with a couple contracts that expired on the 5th, and I held through earnings, hoping for something that potentially like a Netflix or Microsoft, and I got bit pretty good today. And I sold those off probably at about 11:45, 12 o'clock today. But just how do you, I guess, mentally recover when you get something so wrong like that, and going into the next trades without fear, at least for you?
Well, I'm gonna tell you a story that I saw a while back, years ago, and this is kind of a life story, not necessarily with stocks, but it I think it translates perfectly. This farmer had a donkey, and it fell into a hole that was about 20 feet deep. It didn't break any legs or anything, but the hole was too the opening wasn't big enough to get something down in there to pull them out, right? So they couldn't get a bucket down there with a backhoe to pull them out because it was too the opening wasn't big enough, and they couldn't get straps or stuff down there because the donkey's not going to willingly get into the straps, and you couldn't fit a person down in there to put the donkey in the straps, right? So they realized we can't save this donkey. So instead of another one of our animals falling in here, we're just going to start filling up with dirt, right? So they start filling up the hole with the dirt. The donkey starts doing its wailing, it's crying, and then he stops wailing and crying. And they shine a flashlight down and realize the donkey is shaking off the dirt. He's stepping on top of it. So they kept filling up with dirt. The donkey kept shaking off the dirt and stepping on top of it until he got all the way to the top. And the dirt and shaking off the dirt got that donkey out of the hole. Nobody had to save him. They just filled up the dirt. So I guess the moral of the story is when the dirt hits you, you shake it off, you step on top of it, and you keep going, right? You don't let things get you down. You don't let losses push you into giving up. You let those losses build your confidence. You let those losses teach you something. And the only thing that you should do differently is not make the same mistakes.
That's it.
That's good. That's good. Thank you very much.
That was great.
I had a little bit of a emotional trade with Apple and holding through earnings because I'd been playing it for the past couple weeks on its way up and sold early for decent profits into the 100%. But if I'd held for a day or two, these were up 500, 600%. So I was trying to prove something to myself, I guess, of not having the fear of letting a play out. And this one just ended up biting me, which is, it happens. But
yeah, I mean, we all make mistakes, right? And I mean, I'll tell you right now. First, I don't know. When I started doing options, which was maybe, I'm trying to think how long ago that was, 2012, maybe. First trade made $7,500. I put $1,000 into Apple, believe it or not. Bought 4 contracts, made $7,500. And then after that, I thought I was a pimp. So I started like doing more options. I lost $7,500, and I kept going, and I lost another $7,500. I ended up losing $20,000 to $25,000 playing options. And mind you, I lost $6,000 doing futures on silver. That burned me pretty hard, and that happened. I lost $6,000 in 2 days. So the thing here for me that I learned was stop doing the same shit because I'm going to keep losing my ass. I got to change. I got to do something else. And I also didn't go, F this, I'm out. I quit. I'm not going to do this no more because I know I can make money in the market. I just got to figure it out. I got to find it. So I didn't tell myself I'm going to quit, screw this, or this is rigged, screw this, or this is too hard, screw this. I instead asked questions and said, how can I be successful? How can I put myself in the position to be profitable? What can I learn? What can I teach myself? What can I do? What do I need to look at? What am I doing wrong? And all these questions opened up doors. So many doors they opened up. And I ultimately stopped doing options back then, and I started doing shares. And I'd say back in 2012, I did options. I did options for 3-4 years maybe, and that whole entire time I was losing money. And mind you, I wasn't doing. My only real big position that I got crushed on was that silver futures. I did a mini contract. It cost me $2,500 to purchase. I needed $2,500 of margin, and then I lost another $2,500 because I had to throw more. Like I had a margin call. I had to throw more money at it, and I realized after that point, after another margin call came, I'm like, shit, I can't keep throwing money at this, so I stopped. And then all the options that I played before and after that, they were $100, $200, $100, $200. So over the course of 2 to 3 years, I lost $25,000. All right, so I changed. I realized I got to change something. This can't keep going. Can't keep going down this road. I'm just not going to have any money. So I changed it up. I went back to the drawing board. I learned some things that I found a way to teach myself. And we didn't have YouTube videos really back then that had trading like this. We didn't have Discord. We didn't have material that I could easily find and teach myself, right? So I had to read articles. I had to play with real money and lose, right? I had to do things that most of us here are lucky to not have to do. But I guess really what I'm trying to say is I learned from mistakes. I went back to the drawing board. I didn't give up. I kept going because I know I can make money. I know it. And really my goal was I started out in 2009, and I had 10 grand. I put it into uh, 10 different stocks, $1,000 a piece, and I was playing the dividend long-term game initially, and I made money. I made 30 grand over the course of 7 years. I made 30 grand. So that money I never touched. I just threw more money at the market to do options and stuff like that. And my thought process was, how can I get a nice, steady, consistent, and safe return, right? And I can keep throwing money and stuff. So I was like, all right, let's try dividends. That's the first thing I tried, and it was a good idea, especially for a new person that didn't really know much. I did that dividend play, and dividends are trash. To be honest, they're complete trash. So I started, I had a financial advisor. He's actually, my parents use him for their retirement accounts, their 401ks and stuff like that. And I talked to him a lot. I learned about mutual funds, and I learned about dividends and how, his best return that he could make every year for me was 8%. He said really good years, you can see 10 to 12. Bad years, well, probably going to see nothing or losses, right? But the losses will come back because your position is still shares. It's not like, in a mutual fund, you put $500 in, and whatever's in that fund, it throws $500 divided by however many different equities are in there. All right, so it comes back, but it's a long game, and that's what he told me. This is something you got to look at for 20 or 30 years. Throw money at it, and don't even bother looking at it. And I thought to myself, that sounds retarded. Why would I throw my money at something and then never look at it again? And a meager 8% return. So I started asking myself, how can I do my own thing to where I'm making 10%? Can I get 10% a year? And so I started looking at, all right, what if I personally invest in specific blue chip stocks that pay dividends for myself instead of just doing this mutual fund and paying that guy a fee, right? Because he's gonna get his cut no matter what. So I started looking at stuff, and I realized dividends are going to give me 6.5% to 12% at best, and I'm really lucky to get 12%. And the stuff that pays 12% are high risk equities that pay high dividends because they're high risk, right? So then I started thinking, all right, this isn't the right way. There's got to be something else. There's something else out there that I can make money. There are people doing it. There are people getting rich off stocks. I need to figure it out. So I started looking into it more, and then I realized I came across somebody on YouTube at the time. I think it was 2015 or so, the year, and the guy said share swings. And I'm like, huh, what's share swings? What's a swing? I didn't even know what a swing was. So I started looking into it and realized this is how I can get it. If I get like if I learn how to get into a position at a good price and get out of it at a high price, it's that whole concept of buy low, sell high, right? So then I can buy $1,000 worth of shares, and if I buy low, sell high, I can easily make 50% return. So then I started looking into, well, how do I figure out how to find these stocks at a low price? So then I started looking at support and resistance. I found that somewhere. And I started looking at RSI scanners, just RSI by itself. And at the time, I had MACD and RSI only, and I had support and resistance. And I used a scanner specifically for RSI. And if my checklist worked out, I had RSI working, I had MACD working, I had the volume working, I had the trend working, I had support working, right? And with shares, you don't really need too much more. I could look into other types of indicators out there, stochastics. They're similar to some of these things, but really, the RSI was just there for me to use as a scanner. So I found stuff that was overbought, or I'm sorry, oversold, and then I looked on my chart to see, all right, is it bouncing off support? Is the MACD crossing over? Right, and if those checked out, all right, what's the volume look like? Okay, volume shrunk. There's not a lot of volume for sellers, right, and that's been shrinking. So this was how I started to learning what works for me. What's makes me successful, right? And then once I figured that out, I've been making money since. I haven't lost. And maybe some of you all heard me in the past. I don't believe in losing no more. Right? I'm not interested in losing. I put myself in positions that are high probabilities. I put myself in positions that I can get out still with profit. Right? Even if it's not really working out, I can still get money somehow. And I can prolong some of my positions to where they will make money in the future. Maybe not today, maybe not by expiration, but I can roll them out for credit. And with leaps, it's like I'm buying shares. The stocks, if I'm getting it at a low level and I get it with low IV, guess what? At some point in the next 3 to 6 months, that's going to pay. I guarantee that. 99%. I would like to say 100%, but I want to leave a little bit of room there for maybe somebody in here gets a leap and it never works out. There's that chance, right? There's always a chance for something to not work out. But with leaps for me, that's you buy time, you're buying a guarantee that you make money. Okay, Aaron, are you in here, Aaron? He is not.
One thing about the leaps, do you buy them close to the current in the money, or do you just kind of project out and go out of the money to get a better deal?
Well, I go at the money for two reasons. Reason number one, the moment it goes in the money, it starts to become exponential. And if it does go in the money relatively quickly, I see money faster, meaning theta decay hasn't decayed, so that the value of that contract is still worth a lot more because I'm at the money. And the second reason why I go at the money, assuming open interest is there, right? You got to have open interest. But another reason why I go at the money is because of theta. The further out of the money you go, the more theta decays in percentage wise, right? So let me show you an example. And I'll do Apple for February 19th. Right, so
Thank you.
let's see. I'm going to bring up a calculator. Probably won't be able to see it on Discord stream, but you can see it on YouTube stream. If I bought a call today at the 137 strike, it costs $575. Right, so theta decay is $13. So 13 divided by 575. That's a 2.3% theta decay. Right, but if I buy, I'm gonna go all the way out of the money. All right, you know what? I'll go in the middle. So 150. All right, so 186. So $10 is theta decay divided by 186. That puts it 5.4% theta decay. So it's double theta decay, right? Further out of the money. So keep that in mind. The further out you go, the more theta decay is based off percentage. So that's why I always recommend get as close to at the money as you can that you can afford, assuming the open interest is there.
Okay, and open interest is, I see it, fourth column in from the right. On the put side, open interest right there. I see it. And that indicates how many people are willing to take it.
That indicates how many positions are currently open on that strike. So what that really means is it could be short sellers, it could be long buyers. Right? You don't know who's what. And the way you can tell if it's even, so like let's say where my mouse is right now, that's open interest. So let's say let's look at, trying to find a good one. All right, right here, this one. All right, 141 strike. The bid-ask spread is pretty tight. Actually, I'm sorry, this one's even better, 142. right? 370 and 375, the pricing. All right. When that pricing is tight, that means that the bid asks or the buyers and the sellers for that particular strike, 4,158 of them, they're relatively close in ratio, so almost a 50-50, maybe 49%, 51. It's never going to be an even number. This right here is really, really close. I would say 49-51. If you see this like a dollar or two off, it's almost 50-50. Right? So that's how you can tell if there's equal amount of buyers and sellers. And if there's equal amount of buyers and sellers, then that gives you more probability that you can get in that position very easily and you can get out of it very easily because you have, again, buyers and sellers. So when you get into a position, let's say you're a buyer, there's going to be a seller. So somebody's got a contract open waiting to be sold. You go and buy it. Boom, it initiates. And then whenever you're ready to sell, there's buyers in that position, right? So there's people out there with a contract ready to buy. And when you go to sell, it's going to probably initiate instantly. At least on TOS it does. If you've got 1,000 plus open interest, anytime I've ever gotten into a position or try to get into a position, it's got 1,000 or more open interest. It always initiates. Like if I have it on the mark price, it fills, no problem.
That's good information.
Okay, let's see. We got tons of messages here, folks, so please bear with me. Lucas, I would recommend. So I don't like going against Tesla. I would not. I mean, it's a risk to do puts on Tesla. I'll be honest with you. I looking at the chart, yeah, puts would be a good idea, but when we're talking about Tesla, I, I'm a little bit nervous about going against Tesla. Let's say that. Who's that? Meso? He's not in here. Skip. Let's see. Trying to get these out of the way before trade floor flies. It's hard to keep up with trade floor. STPK for RM85. Are you in here? RM8 is. Okay, so yeah, I mean, it looks like it's bouncing off of resistance support, right? So when I say resistance support, I mean resistance acting as support, right? That right there is acting as support, and this is bouncing off that same level. However, I think we've got a slow downtrend. So if you look at this high, that's your downtrend. So I would expect this one to touch this line and fall. Okay.
Thank you.
You're welcome. Let's see. All right. So now I'm going to go through all these messages that I've got. So that one's good. RMO. AC Milan. Is AC Milan here? No, he's not. Or he or she is not, but I'll look at it real quickly. Add support. Really high implied volatility. That looks like a great cash secured put. Not paying too well on premium. Skip. Shares would probably be all right. No, not too bad on that one. I would expect this to maybe test the $23 area for shares. That'd probably be a good share position. Stephanie, let's see, Stephanie in here, APRN. Don't see her, but I will do it anyways. APRN. Oh, this looks weird. It's kind of right in the middle of the range. I'd stay away from that. You could go either way. and these crazy pumps. I mean, you might see it do a nice big pump though, but I probably wouldn't mess with that. All right, let's see.
Hey, Hassel, just quick question.
Sure.
On RMO, you looked at the open interest. What made you shy away from the open interest?
Now I looked at theta. I'm sorry, I looked at implied volatility. All right, so implied volatility is high. So then I said, okay, I could do cash secured puts. So I look at the put side, $195. I mean that's a fair number. I think that's a good price, but I like to see 250 to make it worth it. I mean, it's still a good price. I mean, I could consider it. Be honest, I have to look more into it. But when it comes to energy companies, man, they're so like sketch to me. I've done energy before, and I got crushed. I had to prolong that position for 2 or 3 months, and I just wasn't feeling it. I will say this though, with Biden trying to go against energy production and shutting down federal lands for oil and coal production, that's going to raise the price of energy, and energy companies are going to benefit off of that. So this could be a decent position to get into. I mean, it's got a good open interest, so 6,000 at that CSP. All right, CSP is not a bearish position. This is me being bullish. Just in case any of you are wondering, cash secured puts are bullish positions. I would not buy options because again, IV is high. Right, that's 138, 72% rank. That is high. Never buy with high IV. All right, let's see. 4 a.m. Who is? No one in here named 4 a.m.
I'm here.
Oh, okay. BX. Stay away from stuff at highs. I'm not even going to bother saying anything else. Do not. I mean, you could do puts or something. IV is pretty low, I think. Me personally, man, I don't like being bearish. I wait for the bearishness to fall, hit support, and then that's when I like to get in. Personally, I don't like being bearish on stuff because the market over a long period of time is bullish. All right, so you're going against the long-term trend when you do puts. So that's another reason why I don't really care for puts.
I've been mostly doing calls on this particular one, grabbed a few at a decent price, and they seem to have like a bunch of companies that they're selling, creating IPOs for soon. So I just wasn't sure if it looks like it's going to continue or if I should expect the market to hammer it back down.
Yeah, I mean, some stuff keeps pumping for some reason. I don't know. I can say it did breach resistance there too. Let me go back further. Yeah, I don't know. This is at all-time highs so far. Let me see if I can go 10 years. Yeah, this is all-time highs. So I don't know. I don't stuff at all-time highs makes me nervous.
Understood. So be cautious. Thank you.
Yeah, definitely be cautious. You're welcome. All right. QS, Elysian. I don't know how to say it.
Yep, I'm here.
Okay. Let me just go closer in the chart. I'm actually in a CSP on this. You could. It's consolidating, right? So it did slightly go below support. 45 is my support level, to be honest with you. Let me go closer in. 45 is support, in my opinion. So slightly lower than the line that I've got drawn. This one I have a 45p on, right? So my position is 45 cash secured put. So that's why I sold that one. So hopefully this thing bounces, but I mean, this is just a ton of consolidation. You know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Say 12 days of consolidation. Right, that's a crap ton. So I would anticipate it to do something with strength soon. And my bet is bullish. I expect it to go bullish and potentially break the 75, 76 area and then come down again. However, if it does breach 45, we'll see it probably bounce off of 32 area, right? So hopefully that doesn't happen because that's not going to be good for me. But that's the next support level is $30 roughly. Let me see. What's this? 31. So that's my feeling about that one.
Awesome. Thank you.
You're welcome.
Hey, Hassel.
Yes.
Hi. So since you're on the CSPs, cash it's it's basically off the strike price, right? Times 100. Because I know you were looking at the premiums. So like for this one, it'd be if you had 45K in your account, you can sell the 45 strike put. Like you said, like a few weeks out, if not whatever. But basically, I would need 45K to sell one contract. Am I
4,500.
getting that or? Oh, 4,500. Okay,
Yeah.
got it. Because it's 100 times the strike price. Okay.
Yep.
And it's just the buying power that's just going to be locked up, right?
Correct.
That's okay. And then with that, you said because I know I a couple lectures ago you were mentioning, I think it was Apple or something. You said you mentioned something. I try to re-watch it, but I didn't really understand the whole. Do you purchase it under the current strike price, or how far out? Is it out of the money put that you sell? And then you said something about if it flies through like 150, then you can't do. Because I think you and FaZe were mentioning like the whole compounding, and then yeah, I just didn't. So how would you? Is it few strikes under the
So it
current
depends.
strike, or
It depends. So it depends where the stock price is, and I'd like to do it off of support. That way, so let's say for example, we'll use QS. Support's 45. I actually bought or sold a cash secured put when the price was at 49 or almost 50. Right. So I sold it when it was up there, and I chose the 45p because of support. I didn't think it was going to keep falling. I thought we were going to have it bounce. So the reason why I choose support is because if it does fall from the price from the stock price where it was at, and it comes down to support and bounces, I'm still going to make money no matter what, right? So, and when I sell cash secured puts, I always choose support. I would rather hope the stock price get to 45 and then sell a cash secured put because that puts me at the money, which gives me a ton more premium. So I sold a 45p when it was at 49.50 bucks. I got $500 for it. Right now, it's worth 640. All right, so I'm down right now because the price of the contract is higher than I sold it for, even though the 45p is where I sold it. So you want to go off of support, right? And if you can get support at the money, that's the best time to get it. But the chances of that happening, it's kind of slim, honestly, and it depends on the particular stock that you're doing. There's just a lot of things depend, but if you can get something at support and it's at the money, that's ideal. Does that help?
Yeah, that makes sense. Thank you. Because I was just curious. I didn't know because I read other or watch YouTube and training all that stuff, and people always like they're like, oh, make sure you're like $5 from your at the money, and like make sure you sell like and I guess it's mostly for like credit spreads that I was like really looking at and like credit spreads, but I really am interested in like the CSP because you kept mentioning, and I looked into it and I was like, oh, this is really cool. I mean, like you said, as long as it goes in the direction like off of it, bullish and all that stuff, it's like easy money that you can like put away and kind of like get a return on. And I was just curious because I never. I guess that's the thing everyone, especially who starts off, struggles with is ultimately finding what strike, where, how, and all that stuff. And CSPs were new to me, and but that makes perfect sense. Like off the support, and you want to any support, even if you're high, even if the strike price is currently higher, I can choose a strike price put that's as long as it's at support. Historically, it expires in like what two? Do you do weeklies, bi-weeklies, or whatever time it just out of the money? Then you keep the premium, right?
Yeah, so if it expires out of the money, you keep full premium or most premium. I generally go for 30 to 60 days or 30 to 45.
Oh, okay.
60 days is if 60 days is paying double what the 30 days is, I'll probably go for that, especially if it's support, because if it does a rip, I'm going to see more return. But
True.
there's some stocks that you could do weeklies on. FaZe likes to do TNA. He does weeklies on that, and it pays pretty well. It pays anywhere from $100 to $300 every week. There's another one called NUG that I'm in that's actually down pretty good, and I've had to roll it twice, take in credit. So initially I started out with $300 in credit. I've rolled it twice now. I'm at like $795 in credit. So I mean, the beauty of CSPs is you can roll it out indefinitely as long as it's relatively close to the strike price that you're currently at, and you can roll down just one strike. Then you should be able to take in. You have to take in premium. If you don't, then you're wasting your time. Might as well just take assignment. But if you take in premium, when you start rolling, for example, you want to take premium and roll until it finishes out of the money, because if that position goes to 50% return and you've rolled it for a month so far in time, like if you've already been in that position for a month and you were expecting to be out in a week and you've been in it for a month, you kind of want that to finish out of the money. So you keep rolling it down until it does finish out of the money. You keep taking in credit. So, I mean, before NUG is down where I need it to be, or up rather where I need it to be, I might potentially be taking in $2,000 in premium, right? So the beauty of that is I can continue to take in premium until it does finish out of the money. And when it does finish out of the money, I'm going to have taken in a lot of money, right? So I'm going to have went from 2.5% return that I was looking for to probably 10 or 15%, maybe 20, right? So if your position is like that, then it's better to, if you have to roll and you've done it off of support, then continuing to roll down further below support, it just increases your probabilities as long as you're taking in credit.
You can still roll like if you're winning, right?
Yes.
Or is that not recommended? Oh, okay. Is that what you're saying? So like for your example of QS,
I'm losing.
You said you had
If I'm losing, I want to roll it. I don't want assignment generally. Yeah. So if I can if this position on QS I get 45p and it goes down to 40, I let theta go. I let theta decay. I wait till 3 to 5 days until the expiration. By that point, I'm going to try to roll to the nearest expiration, right? So let's say we're February 19th. Let's say we're on the February 15th, right? And I would go to February 26th. I'd go to the closest expiration and see if I can roll this 45p down.
I'm looking at this.
If I can roll the 45p down and get a credit So let's say if I can roll it to the 44 and take in $100 or $50, I'm gonna do it, right? I want to go to the shortest expiration because I want to take premium. I want to get out of that position, but I also want to take in premium as I'm rolling down. If I can't roll it down for a premium on this date, I'll go to the next one. All right, how much is premium am I
Mm-hmm.
getting to roll down to 44.5, right?
Mm-hmm.
So that's the goal is to roll it until it expires out of the money because I chose support, right? So if right now being in the position, if I see a 50 to 75% return, I'm going to take it. But if I
Mm-hmm.
have to roll it, then I'm looking for full premium. I'm looking for it to expire out of the money because I've rolled it. Right now, if you see 90% return, all right, sure, go for it.
Yeah.
But that's the strategy.
So okay, just one more thing. So when you, for example, so if you bought it or sold it at 500, you would want and say that you were losing, then you would try to go to the next expiration date, lower strike for more than 500, right? So probably 600 credit,
Well, yeah.
just for numbers' sake.
So how it works is when you roll a contract, you buy it back for
Yeah.
whatever it's worth, and then the expiration
Mm-hmm.
that's next typically has more premium. So if that premium on the following expiration is higher than the one that you bought back,
Yeah.
you're going to take in additional credit, basically, right? And when you roll something, you don't pay contract fees, and you're not
Mm-hmm.
realizing, quote
Oh,
unquote, you're
yeah.
not realizing losses if you have to do it manually. Like Webull, you have to do it manually. Thinkorswim, I can just
Yeah.
do roll. So I don't want to realize a loss because it comes up on
Mm-hmm.
the 1099 and it gets confusing, right? And you start looking at your trades and it
Yeah.
just gets confusing. So, but when you roll something, it keeps it just recycles it into the market. It doesn't close a position and open. It recycles it to the market. So
Oh, that's cool.
it's still relatively the same thing, but in Thinkorswim, if I roll, I don't pay contract fees. It doesn't realize losses. Whereas Webull, well, you don't pay contract fees in Webull anyways, but it realizes the
Mm-hmm.
losses. And then when you start trying to go back and look at how much you've lost or won, it kind of skews it, right? It makes it confusing. So that's
Yeah.
why another reason why I love Thinkorswim.
Cool. Thank you so much.
You're welcome. Okay, so Christian 7157 wants to see Ford. So I think Ford, in the long run, if they really start ramping up their EV production, I think they're gonna be a competitor in the EV market. They've already got a couple of EV vehicles out there. I think they do. I know they got that Mach SUV, which personally I think it looks like ass. That's just me. I think they got one other electric vehicle out there, but once they start producing more EV, I think they're going to really start taking up more market share. They're struggling right now, in my opinion. I think Ford is struggling, GM is struggling. All the traditional car manufacturers are struggling because of the EV market. So once they start really getting into it, I think they're going to do well. As far as the current pricing on Ford, it's dropped pretty good so far. I think we could see a bounce again, or maybe a little bit more of a pullback and then more bounce. But again, I'm still calling for that whole entire market retracement here coming up by February. So I'm wary on pretty much everything at this point. Okay.
All right. Thanks, man.
You're welcome. Let's see. Trey, are you in here? Let's see. Trey, can you talk? Prefer to ask your question on the mic if you can. Okay. All right. Well, you got quite a few questions here, so let's see if I can go through. Or I don't even know if they're all questions. It's just a bunch of stuff on. So you got $400 account. Today you got in Kyle's position challenge where you have VXX calls. If you bought one, could I explain what happens in that whole situation? I read everything the channel's about. I still don't understand a thing. Can I explain how, when I buy one option, what happens to it? Like if it sticks, if the stick goes up, what happens? It's called a candle. Number one. So if it goes up, you make money, right? If it doesn't, you lose money. If it goes sideways, you lose money. If it gets to near expiration, it's worthless, so you lose money. I would recommend not trading until you know at least what candles are, what an option chain is, what open interest is, what bid-ask spreads are, what makes the contract price move, what's implied volatility. You shouldn't be trading until you know those things. And hedging is basically saying that I've got all these bullish positions. I'm going to buy VXX because it's a bearish position. So if the market goes against me, I don't completely lose on these bullish positions. I still got my VXX hedge that's going to protect me if the market goes downward. How will it protect you? If you're in bullish positions and the market goes down, the bearish VXX position will protect you because it goes up. All right. We got a couple more questions on the trade floor, maybe. Fareed's wants Neo. You in here, Fareed's? I'm actually interested in Neo. I'd like to see Neo come down some. Hard to say though. Neo's just, I think long term Neo's going to do a nice pump. I think Neo's going to hit $100 sometime this year. We'll see what happens with that. But I'd like Neo to come down some more. Looks like it bounced right off of resistance. Use resistance as support. We'll see. I mean, it's potentially made a double top, so this might be a downtrend. Double tops are typically bearish signals. Actually, not typically. They are bearish signals. Let's see. Doge. Ashley wants Doge. I don't like crypto. It's not showing up. Is that the right ticker, Ashley? It is Ashley, right? AB Will Ashley.
Yeah, that's right. That's my name.
Okay.
I don't know. It was just alerted, and I grabbed some earlier today, and it's already doubled. So I was just curious what's going on. I've been researching microtransactions, and
What's the
very
ticker?
curious about.
The ticker you used was
Yeah,
DOGE.
it's DOG. Yeah, that's what it is in Robinhood, and then I found it on TraderView compared to the
Not all
dollar.
tickers
I
swim.
did DOGE USD for TradingView.
It's Dogecoin, the one that Elon pumps.
Yeah, I know what it is. It's crypto. It doesn't look like I can mess with it on Thinkorswim. I guess Thinkorswim doesn't really do crypto right now, unless there's like an ETF or something that has Dogecoin in it. I
Well,
probably
from your experience and time in the market, how long does like pump and dumps usually last? Like a day or two or extended period of time?
well, I'd have
Not
to look at
considering
the
that this
chart.
could be it.
I'd have to look at the chart, but if something's drastically moving, it's probably going to drastically do both directions, unless there's a really solid reason for it to have drastically pumped. Right? Like so,
It pump.
I'll use an
It
example like AMD when Intel had poor news and AMD started pumping hard. That's a reason for AMD to pump hard is because people were leaving Intel and going to AMD as far as the stock market. So that's a solid reason for AMD to have pumped. But if this has no real solid reason for pumping, then I would expect a dump. Somebody
So
else?
double up and run. MMA, he also just he flagged it in his own personal channel just now, like 17 minutes ago.
Yeah, Dogecoin, it's up like 350% in the past like 4 hours, 5 hours. 480% for the day.
Yeah, that's
Crazy Lotto.
that's funny.
the,
That little
the,
picture he's got of the dog where it's like Vogue, but it's Doge.
there is no logic behind that coin. They just made the coin like it's a joke coin. So if you are in profit, take that.
Yeah, I would
Okay.
definitely take it, yeah.
Yeah, the last time it was over a cent was back in 2018, and it muffled down, and then it's shooting up again. So just grab the cash and run.
Yeah, it's always best to take profits, especially in positions like that. Things that are speculation or things that have no real reason for pumping. Or if you can't identify why it's pumped, then you should get out, especially if you're in nice profits. These
You
meme
got it.
photos are funny. The Japanese dog with the astronaut suit.
Yeah, I grabbed a couple hundred before I left work today, and I came on here and they were like $700, and I was like, "What?" And then I looked online after you were chatting about how to do the put swap outs, and I saw there was an alert, and I was like, "Well, let me try to ask about this."
Yeah, I'd definitely get out of that. I mean, it could keep pumping just like Bitcoin did from 20,000 to 35. I mean, who knows, right? We really don't know. But the truth is, when you're in profits, take them because the market does not like, how do I say, the market likes taking your profit back when it has the chance, and it's going to do it, right? I mean, Bitcoin did its drop. I think, let's see, how does it look now? Well, it looks like it's covered some
Coming
ground.
up.
Yeah, I mean, Mara is another type of coin, but it basically follows Bitcoin to the T. Mara and Riot. Yeah, I mean, they're both almost identical. I would probably take profits on it. Here's the worst thing that can happen
Leave.
is if you take profits and it keeps pumping, you still made money. But if you don't take profits and it dumps, you lose money, or the profit that was on the table is now off.
That's what I'm thinking. Just take down $600. Now I'm like loosely in, and then let the profit ride a little bit, and then keep taking down off of each time it flips. And then if it burns out with their money, then it just burns out.
Yeah. I mean, yeah. So, how much did you put in the position?
I put $501.96. It's at 1,200 now, so I think I'm gonna sell like 700 and just let the original 5 stay.
Yeah, you could do that. That's fair because you're taking what you put into it off the table, and now you're just letting profits play. So, and
Yeah,
what you
grab an
could do,
extra 200.
yeah, and what you could do is maybe put a trailing stop loss on it too. So if it does keep
That's one
pumping,
thing that I haven't figured out how to do. I'm
so
still learning how to put that on.
what broker are you using?
Well, I'm embarrassed to say that this is where the funds are. These funds are in Robinhood, but it's not on Webull or on TD. I have TOS, Webull, and the original Robinhood.
So I'm trying to think if there's somebody in support that uses Robinhood. Ask Arctic Engineer, VCAV AK, or let's see.
For the broker?
Well, I think they use it or they know how to use it to do a trade. If there's such a thing as a trail and stop in Robinhood.
There is no trailing stop in Robinhood.
No?
No.
Too bad. That's too bad. You could do
And
a stop loss.
and I would like to say one thing. That how much you made, Miss, from the Dogecoin?
Are you asking how much profit or
Yeah.
total right now? Equity is at 1,200, floating around there, and I have 500 inside.
See, like 700 you made. I had 410,000 coins just a month before, and I made 400, and I sold all of them. I'm still happy because there is no logic behind that why they are pumping it. So if you're in profit, take it. It might go 15 cents. It might go 10. It might go maybe lower than cent tomorrow morning.
Well, he's got a story
you're
for you,
right.
Ashley, that I think he bought 5,000 worth of some kind of crypto, and it went to 290,000 or 250,000, and he didn't sell it, and then it fell all the way back down to like
Yeah.
10,000. So that's a good
What?
example of seeing all these profits and then not taking them.
Yep.
That reminds me of yesterday. Oh my God.
That's why I'm
Today
telling,
was
because
rude awakening.
I was 100,000 in profit, and it came back 5,000 just in 4 days. So it's up to you. I had 410,000 Dogecoin. I sold December 27, 2020, just like a month before. Right now
I
it's
will end here.
Ashley, message. I don't want to kill your name, Belen. Message her. Okay, I said it right.
Belen,
Belen.
1988.
Yeah. So she showed me a photo of
Oh yeah,
conditional
she's
orders.
really cool. She messaged me yesterday and talked to me about she gave me a private message and talked about my ratio of using my portfolio.
Yeah. So
super cool.
she might be able to help you with some form of a stop loss or something like that that you could put in place so that if it does start going against you, you can still realize more gains than losing all the profit that you had, or I'm sorry, all of the position that you entered with, right? So I know you said you're going to take 700, but you could with the 500 that you have left. So assuming you take the 700 and you've got 500 left, you could message her, or she can message you, whichever one, and see about the conditional orders, and you could most certainly prevent losing that entire 500, and maybe only lose 100 out of the 500 or something like that.
Okay. Thank you.
You're welcome. Okay, I am caught up with messages and at messages, DMs. So anyone is welcome to ask questions now.
Yeah, Hasted, I have a question regarding calendar spreads. Like an example, if I bought a long call and then if I sell out like a short call to somebody, what if it crosses the strike price and if I don't have enough cash in my account to buy back the call what I sold to somebody? How like either Robinhood or Webull gonna deal those things?
So you can't do them in Webull, and I'm gonna strangle myself if you stay on Robinhood. So, but easy answer. If
Uh-huh.
so, number one, a calendar, you have to buy a call. Let's just use a random number of 30. So you buy a strike of 30. When you go to sell or
Uh-huh.
short a call, you need to buy the 30. Or I'm sorry, you need to sell the 30. So you buy a 30, you sell the 30. That's a calendar.
Okay, I think here what I did was like I buy the 30 and I sold the 35.
So that's a diagonal.
Okay, okay.
Still relatively the same. So there is a. So this is why you need to look at using Thinkorswim, and I'm getting ready to show you a perfect example of why you need to use Thinkorswim.
Okay.
When you, especially with plays like that. So,
Okay.
how far out did you buy the call?
I bought 2 months far out. Like I bought the
So,
call that I bought was gonna expire on like March 16.
okay. So 1 second. So you bought a call for March 16th, and did you buy
Yeah.
at the money or?
Little out the money, like $25. Like actually, I can give you the example. Like with the I don't mind anything giving you. I was in the GameStop actually. I bought a
Oh
game.
no. So
Yeah.
I'm gonna do Apple because I'm gonna
Okay, that's
strangle
fine.
myself with GameStop too. So you said, let's just say 3 strikes out,
Right.
right? So
Uh-huh.
buy 3 strikes out, boom.
Uh-huh.
Okay, and then what short did you do? What expiration?
This weekend, like tomorrow.
Oh, okay.
The
So
bad part was I bought like the 125 strike of GameStop for like March, expiring in March. But the bad part, I sold 135 expiring this week.
and it's completely against you, is what you're saying.
Yeah, I think I got
So
confused and I did some bad.
you missed your opportunity,
Exactly. I
unfortunately. So
think
you're probably down on both.
not really. Like I was out. I like right now I have nothing. Like I'm completely out. Like this morning it gave me another chance. Like when it dropped down to 126 something around 12 o'clock something. I was completely out of both of them. I made around like $2,000. That's it.
Okay, so look at this example that I gave you. Can you see my
Mm-hmm.
screen? This is what the Analyze tab does for you, right? So
Oh.
if by expiration on 29th, so if by expiration the short position is at 146, so 146 is going to put me right there. That's
Okay.
full profit. So what I would do here is if I have both the long call and the short call, and you're in the money on the short call, you sell both at the same time. Right? Because you're
Okay.
going to realize gains because that long call is going to be worth a lot more than that short. And if theta has had a chance to work, which in this case it has, you're going to really see profits because if I sold this short call for say 100 or 200 bucks, my break even is going to be 148, right? Which is, so you see this theta line right here.
Yeah.
Right about there is going to be where your break even is. Right? So you want to take the full profits. So the top of this triangle, right? That's where you want to be getting out of something like a calendar or a diagonal.
Okay.
So
And this
if
is
you
gonna
don't,
come as like, I'm sorry. Yeah,
if you
go ahead.
don't have Thinkorswim, you won't be able to do this. You won't be able to
Yeah.
analyze a trade. So that's why, like with when I do calendars and diagonals, I bring up this chart first and I see, all right, where do I need to be? Well, I guess honestly, to be honest, I already know. I already know what prices I need to be out of something, and it's at the short calls in the money price. So in this scenario, I got 146. So in this scenario at 146, that's the price that I need to be out of that position. So as soon as your short call hits in the money. As soon as it crosses in the money, you need to get out.
Okay,
That's where most of your profit's going to be.
got it.
All right.
Thank you so much.
You're welcome.
Also, I got a question. You were talking about a checklist that you use when determining if you're going to buy a certain stock. Can you go over exactly what your checklist is, or what indicators or studies you use?
So it depends on the type of strategy, right?
If we're doing, say, either share swings or options, those are the two that I typically trade in.
Well, share swings, I just look at support and resistance. I could care less what indicators are saying.
Okay.
I really don't pay much attention to them. I mean, again, if the way I use MACD, let me find a different stock because this one's not showing me.
Hello, Amiza.
Let me see if I can find something here where the MACD is showing me. All right, there's a good example. So look at the MACD down here. It's really wide and then it crosses over. When MACD is really, really wide like this, the two lines are really separated apart from each other. That tells me there's a good chance of reversal, right? Look
Okay.
how wide it is here. Look how wide it is here, right? When it gets wide like that, before it does its reversal, before that blue line comes back the other direction, that's when you know there's a very good chance of a reversal, when it's really wide. Now, true momentum is very similar to RSI. When it's overbought and this thing's really wide, for example, in this direction and up here, I've got a standard deviation of 3. That tells me I have a very high likely probability this is going to reverse, right?
Okay.
Now, when I'm trading options, with that stuff being said, plus support and resistance, that's number one for me. That's my core. Everything's wrapped around support and resistance. So I look at support resistance first, and I come in here and look at these indicators, look at this indicator. So those are 4 things. I look at volume, who's in control, buyers or sellers. All right, then I look at, all right, is ER coming up? It's not, it's close, but it's not here yet. Does it have dividends? Because that matters with options, especially the type of options I do. And then I look at implied volatility. Where is implied volatility at? Is it high? Is it low? If it's high, I need to be selling. If it's low, I need to be buying. If you don't know how to sell, don't sell.
Okay. What was that? Sorry, I didn't catch that about the implied volatility. If it's high, then you're selling.
I'll be a net seller, so I'll be selling premium.
Okay. Oh, that's right, because you're doing contracts. And then with that MACD, just because I haven't spent too much time learning that one yet. When you're seeing that it's very wide, that it's going to indicate that a reversal in what the opposite direction of what that is.
So that's not how MACD is supposed to be used. That's how I use it. The MACD is used as when it does the crossover, it becomes bearish. So if the blue crosses over the tan and goes downward, that's bearish. If the blue crosses over the blue, or I'm sorry, if the blue crosses over the tan and goes up, that's bullish. This purple line is territory. So above it is bullish territory, below it is bearish territory. I don't use it that way. I look at it and say, when it is really far apart, that to me is a good indicator of reversal. No one uses it that way except for me, as far as I know. It's, like on the internet. I mean, only people that I've told about it here on this Discord, maybe they use it that way. But beyond that, no, I don't know anyone that uses it like that. Because this is an after the fact indicator. When you look at this indicator and it's done its crossover, you're too late.
Yeah, that's kind of what I'm seeing.
So I try to use it in the way that makes me see before it does its reversal, before I'm too late. Can I tell when it's about to cross over? And the only way that I can really do that is when it's wide. Right? It has to be wide. It has to be like, I mean, look at this right here. It's super wide, right? Oops. If I can draw the damn thing. That is
Yep.
super, super wide compared to everything else. All right, look at all the movements. All right, this one's pretty wide, and then this one right here is really wide. This one, and you can literally see at the top of its wideness. Look up here.
Yep.
All right. Oops. You can. I mean, it's perfect. Off the second standard deviation channel, really wide on the MACD. True momentum is overbought, right?
Mm-hmm.
It's let's see. Let me see if I can tell if that's a resistance level. So it's not a resistance level, so that doesn't check out. All right, so there's something in the checklist that with the stock that's been pumping and going up, it's hard to look at resistance. Right, it just doesn't exist.
Yeah.
So
Yeah.
that's a downfall here in this particular stock. But whenever you see MACD doing these wide things, I mean, you look at it right here, and then this one down here. Look, it's perfect.
Yep. Yep.
All right, and then you go
That's a
over
good.
here and
That's
look
a good.
how wide it is. See, this one's a little bit harder to see.
Yeah.
And you can
No,
tell
that's a good
the
indicator.
drasticness of the movement isn't as big as these other ones. All right, and then I look at this one. This one's huge. I mean, this one's monstrous. And you
Yep.
see, literally, I mean,
Tanked.
it's almost perfect.
Yep.
Right? If you would have gotten it anywhere in this little stretch, you'd be at the top. Right?
Yep.
Even this spot right here, that's still the top of this. That's right when it starts to move downward. So you'd
Okay.
still have gotten it at the top, in my opinion.
Yeah.
And it dropped another $7-8.
And that's something good that you can use for puts or calls.
Absolutely.
Doing what you're doing there,
Yes.
using the two together. And then I'm gonna watch your video on your standard deviation channel. But in that video, you go over like time frames or whatever that you can set the lines at.
So the lines set themselves. It's
Okay.
the chart time frame that you. So like if you look at the lines right now, they're all pretty horizontal. But if
Yeah.
I go to say a 20, see they're up.
Yeah.
Right? If I go to a 60, they're still up. Let me go to 3 years, very up. All right, so, let me see if I can find one. I think Amazon is a good one where
Yeah. I wonder.
it kind of
Mine's
goes.
Mine's not looking like yours looks with the dash lines and the
You got to
different colors.
configure it, unfortunately.
Okay. Yeah.
Let's see. So Amazon up, 90, 90's horizontal. 60 is kind of up. 30 horizontal. 20 still horizontal. 10 up. 5 down. So very short term, it's downward.
Okay. And you don't have to go. I'll watch your video on it. You don't have to go full into depth on that. But as far as using those three or those two channels, the three lines, you're using the top and bottom to indicate what?
Reversals.
Okay.
Or they're outliers. So purple is outliers. Green is still an outlier.
Okay.
So when they hit the outliers, that makes them it's just statistics. In statistics, when you've got outliers, they're very few far and in between, right? There's not
Yep.
too many of them that are outliers. Most of them are going to be in the middle area, right? In between those two tan lines and on the gray.
Yeah.
That's where most of the movement happens.
Okay.
I mean, if I look at all these stocks, look, it's gray, 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 gray. I mean, look, it's pretty consistent gray.
Yeah.
Right? I mean, this one's touching the first deviation on the bottom. This one's kind of in between. This one's on the gray. That one's just below the top first one, and this one's kind of overbought. Right? It's
Gotcha.
97% chance of falling or 3% chance of going past that green line. Right? So it's the standard deviation channels are the same formula that's used for standard deviation in anything. All standard deviation in any type of setting is the same no matter where you go. When it's taught in statistics, it's the same. When it's taught or when it's used in the stock market, it's the same. When it's used in statistical analysis for like, crime or who buys, what age group buys, or what age group uses Robinhood, there's
Yeah.
going to be a statistical analysis based on anybody 18 to 25 is going to be in the middle on the gray line, and people that are 35 to 45 are going to be the outliers, that kind of thing.
Okay. I will go through and watch your video on that to get a little better understanding and get my my screening, my charts set up a little more like yours there.
Yeah, and I go through on how to do it in that video, so it should be easy to understand, I think.
Okay, perfect. Thank you very much. I appreciate it.
You're welcome. Okay, let's see. Blazy Ice wants me to look at PLTR. I don't know about PLTR. It did rip over resistance. I don't know. This one's, I have no idea what this is going to do. So you made profit when it jumped, you sold, then you entered again when it went lower. I mean, it's at highs, right? That's the thing that makes me nervous, is it's at highs. Now this is one of those hot stocks, hot on the grill right now. How long is this thing going to be hot on the grill is the question. And the moment it starts to not be hot, watch it fall hard. So I call them a grill stocks. That's what these are, grill stocks. It's a new stock. It doesn't really, it's no history. Like Fastly, same thing, I think. Maybe not. Oops.
Live class right now, and then I'm gonna go smoke. So when I come home, I can turn the computer off.
So Fastly is kind of the same thing, like just sideways and then rip. Dropbox, same thing, I think. Yep.
Do you mind checking TTCF, please?
Workhorse, same thing, sure. RKT, I mean, you see it's just all this, not a lot of information. It's just hot stocks, hot on the grill. TTCF. Another one. Sideways and then rip. That shit is just sketch to me. Right? I don't like stuff like that. I mean, there's good money to make in the short term. But at some point, does this volatility and liquidity fall off? That's the question you got to ask yourself. TTCF, I think, is too high to be wanting to do calls on that, if that's what you're interested in. And if you've been in here long enough, you know how I feel about puts. Maxco, what is eBay's ticker? I guess eBay. You don't roll calls, because you're always going to pay to roll that. I would not roll the call. You did a 63 strike and it went down today, and it did not do a good down. I would try to get out of that with something if I were you. Expiration is way too short, 129. I mean, you'll be lucky to get anything for that position, to be honest. Ain't no point in to roll it. You might as well just go jump into another position, another call, in a different time frame. It's going to cost you the same thing no matter what. Really no point to roll things that you paid debit to get into in the first place.
Did you already do XPEV?
I have not, but I can do that one next.
I appreciate that.
You're welcome. Let's see. Maysob, are you still in here? Maysob. Nope. I'm confused. If somebody wants me to do something, they ask me to look at something, but they're not in here. So XPEV, you said? Okay.
Yeah.
All right, so XPEV. I'm not really sure about this one. It's kind of in the middle of a range. There's no real support or resistance anywhere. It is EV. I expect EV to continue to be strong. Beyond that, I don't really know right now. It broke through this trend line, so that's kind of a bearish indicator. So I'm not really sure what to say about it at the moment. I'd let this play out some more. If you're not in a position, I would definitely let it play out.
Okay, thank you.
You're welcome.
Hasa, good evening. What's your take on like what's been going on with GameStop and like the short squeeze? And do you think like there's going to be like regulations being put into place in the future to prevent something like this from happening again, or is this like I guess not a what's the word is this like an anomaly in the market, or do things like this happen all the time? It's just like the hedge funds got caught on the other side.
I don't know, and I can't begin to speculate on any of that because that's what it is speculation. And I'm sure that you've been in my lectures long enough to know that I don't do speculation. You know, these are meme stocks, really. There's no reason for it to be pumping other than somebody pumping it. I don't really have an opinion on it, and I don't. The only thing that I can say is the hedge funds are the ones that normally manipulate the market, and this time it was a group of Wall Street bettors that were large enough to manipulate it. That's the only difference here. So if they put some restriction on it, they're doing it in favor of the hedge funds, not people like us.
Dude, so um, I guess it's all speculation in terms of like what will if this will cause any future changes in the market.
Yeah, I mean, all of it's speculation until somebody actually does something about it. I mean, they're just talking, right? I can say that I'll be a billionaire in 10 years, but until I actually do it, it's just talk, right? And I can say that I can bench 400 pounds until I actually do it or prove it. It's just talk. So that's the way I look at it. I mean, is take everything with a grain of salt until you see action.
Sounds good. Thank you.
You're welcome. All right, Maysob, since you're, I didn't see you on YouTube. Oops, Piton. I mean, it's that short-term resist or support for Piton. I think it's got a Head and Shoulders though. I think we have a Head and Shoulders, and that's bearish. That right there is a Head and Shoulders. That is a Head and Shoulders, my friend. I think this is going to fall. Let's see. So I guess I can jump over to YouTube. It's so hard to manage all of these different places where people are asking questions. Let's see. Fubo. Another one of those short-term stocks that really has no analysis for me to do. I would let this play out. It's in the middle of its range. Let's see. Back. Or BB first, actually, BB. BlackBerry, huh? This thing's been getting crushed for years. Look at that, crushed. Just now coming back to life. Have no idea why. Filled a gap though. Maybe see that bounce if you're lucky. Bank of America. So this one's definitely one of those I expect to keep falling. Well, I don't know. This hard to say. Let me look at more history. Well, we could see it come back up and retest this 35 area. It did. It does have a gap to fill. Short term. So I can draw it out here. It kind of filled it. I think it'll continue upwards actually. Might see this retest 35 or go to test 35, Bank of America. I already did NEO. Let's see, CZR. Caesars. I think we see this one come down, to be honest. Vegas is bearish right now. Vegas doesn't start picking up in business until May. This is the down season for Vegas. So I expect Caesars to not really perform too well. Aurora Cannabis, give me, oh, that's ACB. All right, so I think this continues uptrend, just like EV stuff. Let's see. Plug. Lots of meme stocks. It's got a lot of gaps to fill. Quite a few, actually. Got a gap here. Got a gap here. Small one, but there's one. Got a big one right here, though. Multiple gaps to fill on this. Expect those gaps to get tested. Let's see.
Can you look at LI?
Hold on one sec. Let me get through the rest of these YouTube ones, then I can jump to you. Let's see. Looked at Piton, looked at Run. Lee. I think I looked at Lee also. I mean, Lee's pumping today at least. I would expect this to potentially break 35 and retest 36.5. Netflix. Netflix is downtrending. I anticipate a continuation of the downtrend. 100%. Let me get further out. So I like Netflix at 490 and 463. Those are the two support areas that are pretty good. 463 is amazing. If you can get down there, that's an amazing price to get for Netflix. All right, who was that was asking the question?
You already answered it. Thank you.
Oh, okay. All right, you're welcome. All right, let's see. APRN. I feel like I looked at this. This is one of those where it's doing a bunch of rips. A couple of rips here. Boom, boom. I think it'll probably rip again. Maybe retest this $15 area. Pretty sure I did sun run. So please look back at the video. It gets posted soon.
Hassel, could you do Zoom and your thoughts on Zoom Leaps?
Zoom's still in a good position for pop. And I am a fan of leaps. No matter what you do, it's just these are expensive. 9 grand at the money. You got 9. Well, you got 9 G's. You just made what? 400K. You got 9 grand.
No, I ain't got.
You got 9 G's. Don't play. You got this. That's expensive though. I mean, for majority of people, I think that's. I mean, I got a pretty decent sized account, and that's expensive to me. So, but I think it'll pay.
Like 450 or 400? I mean 500. Like little far out the money.
It's still pricey, but that's a good strike. 500. It's got good open interest. Definitely. 600 has also second best interest. I mean, look at the difference in the pricing, right? So at the money, 92 to 9200. If it moves up one strike, you're seeing 400 something dollars. But you go to the 500, moves up one strike, you're seeing 230. Right? So it's almost double at the money versus down here at 500. I'm not saying that 500 is a bad one, right? It's just that's the difference between out the money and out of the money. So whatever you can afford that's got OI. But frankly, looking at this, I think this is the best position, the 500 strike, because of the open interest. I would say maybe the 400 is okay to do, 738. But anything else under 500, man, I'm not a fan. And that's what these all are. You could even consider getting a June. I'm sorry, wrong one. August. I'd get maybe August is probably safe. 500 strike. So there's no open interest in August. June 450. Hell, these at the money ones got it. 6,000. Yeah, 6 grand. 400 strike. So I mean, June's probably not a bad one.
Yeah, that's a fair deal.
Okay.
Okay.
Who else?
Thank you.
You're welcome. I just want to address something to everybody that, you know, this whole GME and AMC and NOK and all these things that are pumping, it's all FOMO. It's purely FOMO, pure speculation, pure manipulation. Yeah, you can make a shit ton of money, but get on the wrong side of it and you can lose money. Right? I don't like touching anything that has no reason or rhyme behind why it's doing what it's doing. It's a dangerous game to play. And if you feel in the FOMO, you should not trade. If anybody feels FOMO, close down your browser, close down your broker, and don't trade. Because you're going to make a bad decision based off of emotion. When I make decisions based off of emotion and just in regular life, it's a bad choice. And when I make emotional decisions in the stock market, it's like exponentially a bad choice. So in regular life, like I'll get emotional and I'll make an impulsive emotional choice. Like I bought my car, I bought my brand new car, and I had an impulse. It was emotional. I felt like ooh, had that feeling of butterflies in my stomach. And after about 3 or 6 months of owning, I'm like, man, that was a mistake. Yeah, the car's pretty, brand new, love it, but I threw money away. It's a bad choice to trade off of emotion. All right. Anybody else have questions?
Hey, Hostile. I was just wondering if you could take a look at SABR, see if you think it would be a good position for shares. It's like a airline booking technology that most all the airlines use.
No, not right now. It's got a gap to fill.
You think it'll come back down to like 6?
Gaps always get filled. Remember that. Gaps always get filled at some point. And right now it's at a high. So I'd stay away from it. But granted, here's a nice big gap. Right? Huge gap. So which one does it fill first? That's the question. I think we're going to fill the bottom one first because, again, I think the market's going to have a downtrend soon. And airlines, I'm sketch. Right? There's no change in airline usage. It's like saying, we talk about AMC and the whole BS going on with that. It's like I drove by AMC today to get dinner. There was no one there. So think about that. And cruise lines, airlines, leisure industry, they're not doing so well. So if we talk about logical thought process, logical choices, well thought out, educated choices, these aren't it, in my opinion. Now, if it does fill that gap on the bottom, sure, grab some shares. Really can't go wrong with shares. There's no other gaps to fill below that one. So if it fills that one first, yeah, I'd say that's a good one to get into because then it's good chance at some point in the future it's going to fill that big one up there at the top, around $18, $20.
Cool. All right, thanks.
You're welcome.
So I got a quick question for you.
Sure.
So you're talking about, you said it a couple times this lecture of, you think the market's going to go down, here over the next, whatever, couple months or whatever. And the type of trading you do, you're betting on the stock to go up. So, if you're always betting on the stock to go up, you think the market's going to go down. What do you kind of do in that time that, hey, I think the market's going to go down? Like, how do you change your trading?
So I go to cash heavy and I'll play just a few plays. I won't go. So normally when I'm playing stocks or whatever I'm doing, whatever my strategy is, normally I'm 50 to 75% of my entire portfolio is in the market, right? I never recommend more than 50%, but because of the positions that I do, the types of trades that I do, it's a little bit safe. It's safer, so I can afford to go deeper. But at this point, I'm trying to go more cash, right? I'll still play stuff if I look for really solid choices, home runs, I call them. If I see home runs, then I'll probably get into it, right? But I I don't like being more than 20% right now. So I like to keep 80% cash. That way, when the market does come down, number one, I won't have a crazy amount of positions to have to manage, right? There'll just be tons of opportunity at that point. And 20% for me is 15,000, I guess. No, hold on, 20,000. Hold on a second. Times 16,000. So I can be in roughly 2 to 3 positions with CSPs. That's typically what I play. I do like leaps, but those I choose specifically on home runs. I really love home run leaps because they pay nicely. 50% returns on $2,000, 50% returns on $3,000. That's huge portfolio gain. Because most of my gains on my CSPs are anywhere from 50 to 150 upwards to 350 to 550. Right, but when I do a leap and it's a solid home run, I'm seeing $1,000. I'm seeing $2,000. Right, so those that do less, they have to really be perfect for me to jump on. Does that answer your question?
Yeah, it does. It makes sense. Thanks.
All right, you're welcome.
I have a quick question, Hostile.
Okay.
With this whole Wall Street bets like stuff going on, how long you think this is a bubble, obviously, but how long you think it's going to take for it to break and for us to get that downward motion like you were talking about?
I have no idea.
Because like it's obvious we were talking on the trade floor today about it, and I just wanted to know what your thoughts were on it.
I have no opinion on it because it's speculation, and I can't begin. Like I won't allow myself to speculate. It's a folly, and frankly, I don't even pay attention to it. Right.
Okay.
So I wasn't in any position to make money, so I'm not going to be paying attention to it now because I'll get the FOMO.
Yeah.
So I just completely avoid looking at it and delete people's comments that are talking about GME and AMC, right? Because I don't want anybody else to get the FOMO, right? Like,
yeah, I get that. It's respect it for other traders and whatnot.
Right. Yeah. So trying to look out for everybody, and it's a bad choice to make if you get FOMO, unfortunately. So.
Yeah. All right. Cool. Thank you, sir.
You're welcome.
So on that topic, kind of not really about anything trying to make money off of those stocks, but just in general of what went down and kind of like how Robinhood stopped the sale of those and kind of screwed everybody and like kind of working against Wall Street, kind of like what are your thoughts on all of that if you have any or if you want to share?
I really don't. I haven't really paid attention to any of it. It's not something that interests me for that one reason of FOMO. I will get it, and I'm better off just not paying attention to it, right? I mean, it's like if you're walking with your girlfriend or your wife and you see really hot girl, don't look, right? Because you get that quote unquote FOMO, right? Your mind starts thinking things that you shouldn't. Your mind I mean, the same way with stocks. You see these FOMO stocks, your mind starts thinking things you shouldn't be thinking. Starts thinking stuff that you wouldn't normally do, in the trade market, right? So you've got to put a filter on yourself. And if you don't filter yourself in a way that protects you, then you're just going to fall into the same trap, right? And at this time, those FOMO stocks are super high. Had you got in it at $14, or hell, I had it when it was $2.30, and I sold it at $4, and then it jumped to 14. I'm like, damn, I missed out. And now I'm looking at it like, holy crap, Went from 14 to $380. That's insane. I could have made crazy money had I held the 100 shares that I had at $2.37. So I just don't pay attention to it, man. It's just do myself a favor.
Yeah, I mean, I get that. I didn't do anything with it either. I just thought it was interesting how it all went down. Yeah.
It's not surprising though that the brokers keep people from trading it because they cater to hedge funds. They're interested in the hedge funds, and it's the whole concept of the rich get rich and the poor stay poor, right? And they're trying to widen that gap. They want the rich to get richer, and they want everybody else to get poorer, and they want the poor to stay poor, right? And
Yeah, and that, I mean, yeah, that's kind of what they talked about, and that's kind of why I just found it interesting. I mean, they just like cut it off. They're like, no, we can't have you guys do this, you know?
And I'm not a fan of Alexandria Ocasio-Cortez, right? Not a fan of her, not a fan of her policies. But when she spoke out against this, she got my support. Right? That's one thing that I would totally be behind. If she wanted to hold people accountable for that, hell yeah, they need to be held accountable. Hell yeah.
Yeah, I saw that too. It was funny. The Barstool Sports guy, he's been all over this. He was like, when Trump and AOC are on the same page, you know something's really wrong.
Right. So it's funny how we can find common ground. Opposing political parties can find. When I say we, I mean United States. We can find common ground, right? But it's the common ground that we should all be paying attention to is specific policies where people that aren't part of the system, the elite establishment, when it affects the elite establishment negatively, the ones that speak out in favor of that affecting them are the ones that you should pay attention to. The ones that aren't speaking out on things like today, those are the ones you need to be questioning. Right? So how many people didn't say anything? Right? How many people didn't come out in support of that? Of what AOC said or Trump said or Elon said, right? Or Dave Portnoy, which is the guy you're talking about. But when other BS is going on that benefits the elitists of the world, look who's talking when they're in favor of it. Look who are the ones that are supporting it, supporting the rich getting richer. And I'm not talking about people that come out and say, oh, so and so supporting the rich or so and so supporting this or that. Because a lot of this BS where people come out and run their mouths, it's just lip service, smoke and mirrors. They're not actually like if I'm trying to think like Elizabeth Warren. She talks about trying to penalize people like in the stock market and want to come after people, but then turns around and takes money from hedge funds for her campaign. Like, let's be honest with ourselves. She's talking about them behind, badly in public, but in private, she's taking their money. Right? So that's the kind of shit that bothers me. They got a public voice and a private voice.
Yeah, all interesting stuff.
It's just hypocritical, really. When you see hypocrites, a duck is a duck. When it walks like a duck and talks like a duck, it's a damn duck.
Yeah.
Do as I say, not as I do. That's a career politician. Do as I say, not as I do.
Pretty much.
And people want to shit on AOC and Trump, but guess what? A lot of times they do as they say. Right? I may not agree with a lot of things Trump say, or I may not agree with things AOC says, but when they say things, they don't backtrack or they don't do something differently in private. Right? They mean what they say and they do what they say. I have yet to find any real solid evidence that says both of them aren't fully they're both not fully in the direction of their policies. All right. I I think Trump is a patriotic nationalist, and I think AOC is a progressive socialist, right? And there's nothing in their words and their actions that says any different. But then you see people like Pelosi or Schumer or Mitch McConnell or McCarthy. They say one thing, and then in private they do something else, right? Those career politicians are the ones that are screwing the country. It's not these new people. It's not Trump. It's not AOC. They're new. They haven't been here long. They're not career politicians. It's those scumbags that have been there for 30 years. Oh, guess what? I think Biden's been in there for 30 years and hasn't really done too much either. But
Term limits.
I mean, we really do need term limits because what good does it do if they're in there for this long amount of time and they don't do anything for anybody, right? I mean, what have they done? And I'm not going to go down the path of trying to pick apart specific parties or politicians because the ones that have been in there for decades, they're not Democrat or Republican. They're elite. They're the problem. So they can be red or blue. It does not matter. The new people, those are the ones that we should pay attention to see if they're going to oppose the elitists or are they going to fall in line and accept whatever it is the elitists and the corporations and the lobbyists are giving them, right? Are they going to stand up and be like, no, we're going to go for our policies and what we believe should happen, not, oh, we're just going to take money and just kind of vote along party lines and make it seem like we've got a choice or we've got a vote. We don't. Just like that video that I posted. We don't have a vote. We don't have a choice. Got shit. Got the stock market though. We got this education. We can better ourselves. We don't have to. I mean, at what point can we do anything about politics, anyways? Right? I don't think there's anything we can do unless something drastic happens, like a meteor hit the planet and everybody forgets about left and right and everybody forgets about who's rich and who's not because at that point it's not going to matter anyways. Everybody's trying to survive. So when we all get put into the same what do you call it? When we stop using class warfare against each other, that's when we can start solving problems. Whether it be skin color, whether it be ethnicity, whether it be gender or political affiliation. I mean, you name it. There's so many different ways to do class warfare. And that's a game created by the elite establishment because they want to keep people divided. They're not interested in anybody being intelligent and doing the right thing. They want people to do the wrong thing. So it's a demoralizing conversation, to be honest.
Yeah. Well, thanks for your thoughts on it, man. Appreciate it.
You're welcome. Let's see, I got some more messages here. Let's check them out. So Max, how I set up IV indicators, I have videos on it in my channel. You should check those out. I don't understand what you mean by which call do I prefer to buy and how many months on front it should be. Need to specify or clarify that. All right, anybody else have any questions? Looks like Stephanie wants ABMD. ABMD. I feel like I've looked at this one too. I'm not totally sure about this one. This is expensive too. How much is the options on this? Well, it's not too expensive because there's not a lot of liquidity. I'd probably stay away from that one. There's no open interest, especially on the front month too. That's terrible. Yeah, there's not a lot of OI here, so if you want to do options, I'd probably stay away from it. And it's expensive, so I wouldn't do shares on it either.
What's that date and time you always go to the very first time you go to it?
180 days, 4-hour candles.
Thanks.
I like that one in the 1 year, 1 day. Those are my favorites. Anything shorter than that, it's a little noisy. I mean, it depends. Like, I don't know, it just depends. Really depends on what I see on the chart, right? I mean, it's kind of, I can't really tell you why I choose certain specific time frames other than those two I just mentioned are my favorites. But beyond that, if I choose a different time frame, it's more or less what I see on the chart, and then I'll just start picking and choosing between time frames. It's kind of just a default thing that I do without thinking. But yeah, the two that I mentioned are my favorite two to really look at, because the further out you go, the more confirmation you get based off of support and resistance.
Yeah, I get that. What was the second one? You said 1 year,
1 year, 1 day, 180 days, 4 hours.
Got it. Cool. Thanks.
No problem. Okay. Who else? No one? Do I need to go into another rant?
Yeah.
Let me think of one. Y'all got to ask questions for me to come up with a rant.
Look at FSR.
First Solar. All right, let's see. Or Fisker. Never mind. It's got pretty tough support at 14.5. It's got multiple areas actually. So it's got, let me draw this. So this whole area is resistance acting as support, because we got pretty much all of that is support. Let's take a look further out. Ugh. So do got something going on there. Let me see. No gaps. Tons of support at 14.5. And that's insane. That's pretty solid. So filled this gap, filled that gap. There's no gap there. I'd say if it touches 1450, you can jump on it. But in the back of my mind, February's coming.
Cash out. Cash out.
Yeah, especially if you're in profits, definitely get those profits. And then
I just scalped that crypto, like you guys said. I finally got it to go out.
Yeah, and play stuff with caution. Don't do too many plays, 20% or less of your portfolio right now. I'm a little bit too heavy right now. I think I'm right around 30% of my portfolio. So, but then again, some of my positions are gold and silver, and I think they're going to benefit off of the market coming down. We'll see what happens. But at some point in the future, they're going to definitely come back up to where I want them, and I'm going to be taking profits on those. And then probably not going to play gold and silver anymore because it's such a drag on my portfolio.
Because it's not moving.
Well, yeah, it kind of just goes sideways for the most part. I mean, it'll do a nice little pump and then it'll fall twice as hard and then come back up and fall twice as hard. So it's just irritating. Like here, I'll show you an example. Like Node T. Now, don't get me wrong, I like this one. But so right here, it fell. So first off, it had a bottom, which is where it's kind of at yesterday or today actually. This is a bottom. Let me draw the line right there. So when it first made that bottom, which is, I'm going to draw this line all the way to the left, and you can see it basically does a double bottom here. That's beautiful. And then it ripped, right? But we hit a bottom here, and then it did a nice little jump up, and then it went right back down. That's the kind of thing that gold and silver likes to do a lot. Irritates me because I was in profit, and I'm like, sweet, all right, we're about to have our breakout, and then it comes back down. And if you look at some of the other miners or whatever, they do exactly the same thing, right? You see it doing it there. SLV is really kind of the only one that's a little bit better, but it's still a pain in the ass because it doesn't. You see what it does here? It's kangarooing around. It'll breach a point and then come back down, or breach a point and then come back down. I mean, this is kind of in a uptrend now. Still, it just takes way too long. If I get in at the wrong time and I have to bag hold, it's like I'm holding for 3 to 5 months. It's just a waste of my time and money. So,
Because it's not moving.
yeah, it just goes sideways. And I can't sell CSPs on it because the premium's trash. So, I mean, if I look at the CSPs on SLV, I like to typically do monthlies. I mean, 109, that's, when I do my math, I like to see 5% on leveraged money. So let's see, 109 divided by 2400, that gives me 4.5. So it's almost there, but not where I want it. And it's typically not that good. So, and if at support it was showing like 45 cents, I'm like, that's trash. I waste my money on that. And it's like 1.5% or some junk. Because I like, if it goes up in my favor, I'll take 50%. 50% of 45 cents is trash. Might as well, my money can be better utilized elsewhere. So that's why I don't really care much for these anymore. I will do leaps though. So I got leaps on SLV and GOLD gold, which is Barrick. I've got leaps on both of these. So that I'll do, but very sparingly, because the chances of them pumping sooner rather than later are slim. I mean, how long has this crap been down at what's this support area right here? 22. Yeah, I mean it's been down there for 2 full months, and it came right back down yesterday. It's trash. So that's the thing that bothers me. I can't stand crap that does that.
You might be in luck. It's the next meme, WSB, Wall Street Bet, whatever, target, SLV
It
apparently.
is.
So I don't know. It's like you said, the AMC and the GME was just crazy and all that stuff. But SLV is pretty solid, isn't it? I mean, over the years, it's not just like you can't really pump into silver. It's like important, like gold, any mineral, all that stuff, right?
Paper money, paper gold, paper silver is very different than physical. All right, so what you're talking about is physical. Physical, you can't manipulate it, you can't create it. It is what it is, right? There's a certain amount of mined every year. There's a certain amount that goes to waste every year. That's with silver or gold. It just gets mined and then stacked and thrown into a vault or created into jewelry. When it comes to the paper markets, this stuff's highly manipulated. extremely manipulated to a certain extent, obviously, but it still gets manipulated. The whole entire silver market's manipulated by J.P. Morgan Chase. They used to own 90% of all silver in the world. Tell me that ain't manipulation. I think now they're down to like 52%, but it's still a huge chunk of the world's silver. That was 10 years ago.
Wait, like
90%.
physical?
Physical, yes. They have vaults full
Oh
of
god.
physical, yes. So they've been manipulating it for years, and people have been buying it up, and ever since when it gets mined, it's been getting bought up for the past 10 years. And United States actually is the top buyer of silver as far as the average Joe, right? The average Joe is the top buyer of of silver in the United States and across the world. And JPM, they're having trouble manipulating because their market share of silver is going down, right? So when that goes down, when that power starts to thin out, then you start to see silver get its steam. But if you look at the last 10 years, I'm gonna show you. Look at that. 2011. It's just been getting manipulated down this whole time. All right, so I bought my silver futures in 2013. I think is what this is. 2014. And I got freaking crushed. I was $7,500 in 2 days. And it was probably somewhere right here where this huge ass red candle is. But people in the U.S. have been buying silver this whole time, the past 7 to 8 years. This whole down area been getting bought up. There were times where I tried to buy silver physical, and they didn't have any. There was none. It was a backlog. Wait 3 months to get your silver. So,
Do you have a target price in mind before you actually sell your?
before I sell my physical?
Yeah.
Over 50.
Yeah. All right.
Spot price. Let's see.
Yeah, I recently started buying silver.
So right here, the all-time high is 48.35. I think we beat that. I think we're gonna crush that. Actually, I think it's gonna go to 100. Personally,
That'd be dope.
I mean, think about it. Back then, when it went to $48, that was 2011. We did 3 stimulus for 2008, which is $700 billion times 3. One of our stimulus this last year was more than that entire thing. So, when the thing about gold and silver is it maintains the value of money, right? You buy gold today, doesn't matter what price. If you buy an ounce of gold today, that ounce of gold will buy you a nice fine silk suit for $2,000, which is what it costs today. That's how much an ounce of gold relatively costs, $1,900. 10 years ago, an ounce of gold would still have bought you that same fine silk suit. 20, 30, 40, 50, 100 years ago, an ounce of silver, I keep saying silver, an ounce of gold would have still bought you that same silk suit. And I guarantee you, 10 years from now and 100 years from now, no matter what the price is, it's going to buy that same suit. But the dollar, forget about it. Ain't no telling what it's going to cost. Right, we can talk about gas. We could talk about milk and eggs and bread. Last time I was on this lecture, I talked about that, how gas was 90 cents.
Yeah.
It might have been you, actually.
Yeah, we were talking about that. So I don't know if you mentioned this earlier when we were looking up the Dogecoin. Do you actually mess with crypto at all? Have you ever put money into it? Anything?
No.
You just don't like it at all? Even the concept of it, kind of the future money type thing?
I mean, it's all talk, right? Until they actually turn it into something until it actually becomes that, I'm not going to mess with it, right? I mean, you've got the big banks and you've got all the governments in the world opposing it. That tells you something, right? So until they're actually implementing it, so I mean, I foresee maybe crypto becoming a one world currency. But the problem that the governments of the world don't like is that they can't manipulate the price. It's like gold, right? It's so with Bitcoin, for example, it gets mined, and the mining process, it only you're only able to mine a certain amount based off of GPU or CPU or whatever, right? There's a limitation. That's the key word here is limitation. The U.S. government does not like limitations on the money, right? They like to print, 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 print. You got trillions of dollars, print. Let's go print it. Let's go type in a magic number in the bank computer, and there we go, right? Can't do that with Bitcoin. That's why they took us off the gold standard, because you can't print gold, right? And the one way they've been able to keep gold down is paper trading it, right? GLD, SLV, and guess what? Crypto is hitting the stock market. And what do you think is going to happen to crypto now that it's hit the stock market? It's going to get manipulated, right? It's the same thing that happened to gold. And that's their whole plan, in my opinion, is to get it on the market so that they can manipulate it, so they can keep it from being a currency that the world uses that can't be printed. They want to print money. That's the bottom line. So if there's something out there that prevents them from printing money, if there's something out there that the elitists that control the world no longer have power, they're going to do everything they can to manipulate it. So that's what I expect.
Interesting. It's funny I said something about the gold standard. It's so many people don't realize that the dollar isn't backed by gold anymore.
No, it's not at all. And I guarantee you the gold that's in quote unquote Fort Knox doesn't exist. It's been sold. It's not there. 5 years ago, Germany wanted their gold back that the United States held in the Federal Reserve Bank vault. And the U.S. said, we'll give it to you in 10 years. I'm not going to give it to you right now. And behind closed doors, they say,
we don't have it.
Exactly. We don't have it. So you're going to have to wait. We're going to have to come up with it. And, we're going to manipulate our dollar more, and then we'll buy some more for you, here and there. And then we'll throw you a couple of coins every once in a while.
Yeah. Interesting stuff.
On the same topic of just, this expected market pullback. I got into Cal's VXX play. Can you kind of just go over, I was looking a bit into what VXX is. Can you kind of just go over to how it, kind of the premise of VXX almost?
It's an inverse stock. So it's an inverse to the SPY. And so SPY goes up, VXX goes down. SPY goes down, VXX goes up. It's a bearish ETF.
Yeah. I mean, how does that work? I'm just wondering.
Well, what do you mean, how does it work?
I don't know how an ETF is constructed, but how does a bearish ETF?
I think he's talking about how it works as a hedge.
Yeah,
that's how I learned it.
No, I understand how it works as a hedge. I mean, I guess I understand it, but yeah, I understand how it works as a hedge, but that's what you're saying.
I mean, are you asking about holdings or?
No. Never mind.
Okay.
Could you look at LGVW?
Longbow. Is that Apache helicopters? It's not pulling up.
LGVW, sorry.
Oh, VW.
Yeah.
LGVW. Another one of those short-term ones. Not too much I can say other than, I mean, this right here is all I've got to analyze. There's nothing else there. That's why I'm like, it's sideways since. mean, there's not much I can tell you other than here's support, here's resistance. It's in an uptrend. I mean, that's about the only thing I can say, right? I mean, there's not much else I can, and it's not even a great uptrend.
Oh my god.
It's kind of a soft one. But you know, you kind of see a soft downtrend. Beyond that, there's nothing else I can say. I mean, support resistance levels, but high implied volatility. There's not much else I can say or see off of that. All right. Anybody else? I'm too shy to talking to Mike Lucas. Be shy.
Yeah.
Oh, there he is. Leaps for 900, $1,000. Nothing at this time. I mean, everything that I watch, there's nothing at lows or nothing at support. So, you know, nothing really. Maybe RKT came down, but I mean, RKT isn't. It's just not a. What's the word I'm looking for? It's just not quite developed yet, so it's not going to have big pumps. I mean, it had one right here. This one. That's one out of the whole entire time, except for when it came out.
Okay, thank you.
It is cheap though, $600. But I wouldn't touch it right now. Not that. Wait till Rocket hits $20, then maybe get a leap if you want. I mean, silver and gold, GOLD, you know, they're prime for leaps. I've got two of them. I've got a silver and a gold leap. SLV and GOLD leaps, I have those. I like NUG-T. Shit. If NUG-T comes down to $59, $60, I'd buy a leap on that one. They're 1800.
What did you say? What did you say it was?
NUG-T. Right now they're $1,800 though.
This is dead ass.
All right. Anybody else?
Thank you.
You're welcome. No one? No one? No one?
I wanted to know ATVI, video game company.
Bounce off short-term support, but it's downtrending. So one thing I would say is,
Leaps for Christmas.
I'm sorry?
Like the forward progression of it.
No,
Maybe
no, no.
wait for it to go down a little bit further. Get a
So
little deeper down into the beige line.
no. So right now it's got. So it's hard to show. Let me see if I can. No, that doesn't work. It's hard to see here, but there's a double top. This small area here, there's a double top. Right, and
Yep.
then there's a downtrend. Right, this downtrend right here, steep downtrend. So lower high, lower low, lower high, lower low, lower high. We'll see if it makes another lower low. If it breaches its short-term support, which is here, then we're going to see it. We're going to see it probably come down to maybe 84. Hard to say, to be honest. Let me see if I can go further out. Yeah, it's at all-time highs. I think this comes down. Definitely. I mean, we got all-time highs, and there is a gap right here. A small one, but there is one. Let me see if I can draw it. That's a gap. I don't consider wicks to be anything when I'm doing gaps, only bodies. So then I go closer in again.
Nice.
We can see a gap
That
down
was
to
precision.
84.
You saw that from way out here as well. That was precision.
Now,
Quick question on the gap thing.
Okay.
So, gaps can, I guess, I don't know if it's the right term, but like short or tall, big gaps or small gaps. So when you say it, most likely it's going to fill the gap. Does it have to retrace the whole opening of the gap, or just hit somewhere in the gap, or does that
retrace the whole thing?
Okay.
It's got to cover that whole entire empty space.
Okay, so everything that was missing, it needs to fill in.
Right.
I got it.
So NUGT does some serious gapping. Right. I mean, look at all these gaps right here. Gap, 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 gap. This is a gap on a one year, 1 day. Here's a gap. Here's a gap. Right. So it filled this one. This vertical rectangle. It filled that one. Right. And then short term. So you can't see it there. If you can, it might be hard to see on your screen, but there's a little tiny gap right here, and it filled it. Right, so there's a chance it could come back down. But if I go to the 1 year, see there's a gap right there. Right, and let me see if I can actually here is a better way to show you how it fills the gap. All right, right here, see this vertical rectangle? It gapped up hard, and then a few days later, it filled it, and it filled it with strength. So it just kept blowing through that gap that it filled. So this is what I mean by like gold and silver. It creates the resistance point, but it is set a higher high, higher low, higher high, higher low, and it should have went further up. It should have kept going. It should have went to fill the second gap here, this one. But instead it was like, nah, psych, and it fell. See all these little gaps in here? They all get filled. This ticker fills gaps very, very often. Other tickers may or may not fill them as quickly. I mean, this one, it's almost like it fills it within days. Especially the downside gaps. It's going to fill that one like almost immediately. Like it's like this one right here. If you can see it on the screen, let me see if I can draw it. That right there. It filled it. It pumped, dumped, filled it. Right? Got a little gap right here. Pumped, dumped, filled it. Right? And then pumped again, made a big gap, dumped, filled it. Right? Here's another one. Gapped up, filled it. Here's another
What's
one.
the longest you've seen a gap take to fill?
I mean, there's some gaps out there that are 3-4 years old.
Oh, wow.
Upside gaps, mind you. So
How are they created? Just the stock price is like going up high so quickly, or is it overnight?
Yeah, no, it's usually very fast movement, extremely fast movement.
Cool.
But I've kind of trained my brain to just see these things. Like gaps, I find pretty quickly, just like support and resistance. Like I don't have to draw the stuff out. I can just see across the chart a good solid support area or resistance. It's just practice, right? I mean, I used to not even know what any of this stuff was and so confused. But after, especially these live Q&As, these lectures, after I've done this thousands of times, I mean, I dream about it. I close my eyes and see gaps.
Bash some fun and shit.
Yeah, man. Thanks.
You're welcome. And when you start seeing gaps in support and resistance in your dreams, and when your eyes are closed, you've really ingrained it into your brain. And at that point, it's like you could do the same thing. You will be able to do the same thing as long as you keep practicing. You will be able to.
Random question: you ever chart on a laptop? Do you find it?
So I have a laptop downstairs. So like when my wife leaves and my daughter, she's really young and she's playing, um, I can't be in my office with her. She's she's the miniature Godzilla, so everything in my office would be destroyed. Um, so I've got to let her, kind of play, and I'll get on the laptop, but it's just not the same, right? It's a little small screen compared to, and I've got three screens. Two are 24-inch screens, and then one 34-inch widescreen. So I do all my charting on that. It can be done on a laptop. It's just it's not as easy, and my laptop's kind of slow. I feel like I need a new laptop too. So
Yeah, I feel like the more space, the better.
absolutely. I mean, I can put multiple charts on these three screens that I've got, and I can make one screen a main chart, and then um, my other two screens I can put like my 34-inch widescreen. I can put eight charts, and then my other 24-inch screen I can put two, and then my main 24-inch screen I can put one. So it's a lot of versatility when you've got multiple screens. You ever seen that guy on YouTube? I can't remember his name. I know what he looks like. He's in New Jersey. He always trades in a white T-shirt, and he's got like 50 monitors, 42-inch screens. And he stands in the middle of a room, and he's got each screen has one big ass chart, and he's got like three people that he calls out plays to that work for him, and he does over 100 plays a day. Oh man, what's his name? Oh, it's gonna bug me now. It's a kind of an odd name. It's a unique name, but um, it's really awesome. And one day I was thinking, oh, I'm gonna be trading like that.
That's crazy. I need to look that guy up.
I forget his name. It's like shit. I'm gonna find it. It's gonna bug me now. It's gonna bug me if I don't find it. Hmm. I think his name's Paul. Is that it? Nope, not that guy. It's like Kaleon or something like that. Fuck. I know I found him on YouTube actually. See if I can find him. There he is. There he is.
I am at Planet 13, which is the largest cannabis dispensary in the entire world.
How many monitors do you need to day trade? Question today. We're actually going to address a video that I have here on my channel with Stephen Kalasian.
Yeah, there it is. Stephen Kalasian. Look that guy up. He's got like
How do you spell the last name?
Kalayjian. Stephen Kalasian. This dude's insane, man. You can tell he's got money too, because he just like, he don't care what he looks like. He just chilling in a t-shirt. This dude throws him on YouTube.
What's the last name again? I got some random dude in the middle of the ocean.
Kalasian. Kalayjian.
Oh, I got it. There we go. Yeah. TikToker.
What's going on, guys?
Yeah, it's like a company that he works for or something. He created his own algorithm that finds stuff and
yeah, sort of kind of like Ross Trades or whatever.
Sure.
That's cool.
But this dude's got multiple screens. I don't know how he does it.
We had one trader in the trade floor today explaining a new indicator to us. It was a simulated line that indicates when you should buy and sell. It was really interesting. I was going to ask you about that.
Wouldn't know. One thing I can tell you is that a lot of those indicators out there are traps.
This is one yeah.
Like there's one called Super Trend.
Yeah, that's one of them is, and I was like, I don't know, but this guy seemed like he was in there. He was talking it up. It was interesting. We looked over Peloton, PLTR on it, and it looked pretty good. It was just a mix of MACD.
The thing is, I did the Super Trend myself, and everything that I looked at, I was like, wow, this is awesome. You know, it's hitting on the money every time. And then when I went to actually trade it, it gives indicators and then takes them away.
Right.
Right. So you'll be like, oh, indicator, sweet, jump in. And then it comes back and says, oh, nope, psych. We changed our mind. No indicator. And then you're screwed.
So what, you have to like wait like an extra minute and a half or just don't even use it?
It's better, I think, when you use something like that, it's better to do long-term stuff like 180-day, 1 year, and you see an indicator pop up then that's probably a good indicator. But when you're using it for 5-day, 15-minute, scalping or 20 or 10, 20 or 30 days, they're traps.
Looking for a low point.
It's traps. So
yeah, I've used that as well, and I know exactly what you mean. Because like if it's for long term, like you said, day or year, I mean, stock's not gonna, the body's gonna move, but the wick's gonna be like consistent. So the way I saw it, or someone told me, basically there's like a invisible line kind of thing, and when the stock crosses it downward, then it says sell, and that's when the indicator comes, and it's like, oh, supposedly like bearish. But then for the shorter term, you know how like stocks go up and down real quick, and even the body can change it, and as soon as it breaks a trend upward, you can have one red candle, it'd be sell, and then automatically it'd be like a buy.
Yeah.
And it's nowhere like near like any trend. It's just simply crossing like a algorithm line or some calculated line or something. It's confusing, but it's better for like long term and like you mentioned, as a series, in addition to other indicators and just another confirmation. But for scalping, it's like super crazy.
Yeah, scalping. Stay far away. But long-term stuff, if you like, I use the 180 and the 1 year chart. Maybe I'll jump back into using that super trend just for that specifically, because the type of trading that I do, those are my charts. So I might try it again. When I used it before, I was doing scalping with it, and that was bad and ended badly. So I stopped using it because I was irritated with some fake ass shit. So I might reattempt to see how it looks based off of long-term charting. Maybe that'll be. We'll see what happens. All right. Anybody else? I'll take a few more questions before I end it.
Hostile, I was wondering about screeners. What do you I day trade. I know you do a bit more long-term stuff, but how would you recommend using screeners, or what's your experience with screeners in the past?
Well, screeners work. They'll show you stuff that that meets the criteria, right? You got to be the one to find the criteria. You got to be the one to input the correct criteria for what you're looking for. But if you can find the right criteria, you can find stuff that pops up pretty easily. The thing that I don't like is that when you do scanning, you're scanning for stuff that you've never traded before. So unless you're day trading it, it's dangerous because you might be like if you're a swing trader with shares and you expect to hold something for a month and end up having to hold it for 2 or 3 months, fundamentals are going to make a difference at that point. And so then you need to consider that. But if you're day trading and that's all you're doing, scanners work. You look for gappers, look for. I mean, there's just so many things in TOS that you can scan for. Hundreds, thousands, hundreds of thousands of things you can scan for. I mean, you can scan for chart patterns. You can scan for dividends. You can scan for ER. You can scan for. I mean, whatever you can think of, you can scan for it.
Right. Okay. So day trading, you think it's the best use of it?
Probably, yeah. Now, I mean, if you scan for something, you find stocks that are really good stocks, well, something that's been around for 10 years or whatever, and you look at the chart and it's got good charts set up or whatever, then I can say, okay, like if you scan for something and Nike or Coca-Cola pops up, and it fits the criteria you're looking for, do it. But if some random ass thing you've never heard of, and then you search the company name and you still don't know what they do or what the heck it is, that's something that you need to play with caution, if
Right.
even
Okay.
playing.
All right. Thank you.
You're welcome.
Hey, Hostile, could you take a look at LMPX?
LMPX. I feel like I've looked at that one too. Maybe not. Let's see. What is it you're trying to do with this?
A share swing.
I would put entry order at 2150. That's what I would do.
Okay, awesome. Thank you.
You're welcome. Average down if it gets to under 19. Yeah. $19 and less average down.
Sounds good.
All right. Anybody else?
BLM
Hey,
page?
did you talk about WWR earlier? Okay.
And I don't like it because it's been around $1 recently.
Yeah, I have some shares. I'm trying to swing
I
to
mean,
profit for now.
it's in an uptrend, so there's no telling how long it'll last, but it's in a short-term uptrend and sideways movement for a while, a few weeks, and then uptrend. Broke above resistance, having trouble right here at this resistance, $9. I'd say it bounces from where it's at and tries to retest 9.
Mhm.
So I'd get out when you see profits.
I see. Thank you.
You're welcome. Ashley, you were saying something?
BLNK. I've been trying to draw my own charts and see how yours come out.
BLNK?
Yes, sir.
What time frame are you looking at?
Take a look. I think it's 12. I get turned around in here still. February, next Friday.
Are you talking about expiration?
Yep.
So you're initially you said you were drawing stuff out on your chart and you wanted to see if mine would line up with what you drew. What time
Yeah, all I
frame?
have is support and resistance.
Okay, what chart
Oh,
time frame are you using so I
I
can?
do the same thing. I do 1 day, um, 1 day, 5 minute.
1 day, 5 minute?
That's what I think that's what I started doing with Kyle.
Huh. Maybe something similar to that.
Maybe I wrote it down wrong. Yep. That's good.
It looks like this. Send me a screenshot. How about that?
All right. Let's take a picture. Oh, I think, all right. Let me take a picture. I sent it in a DM.
Okay.
Took a while.
That looks like definitely not the one I've got up.
More zoomed in on the end.
I think it's probably closer to this. 60. I think 60 day 1 hour is what mine's kind of. Let's see. Let's see. Okay, yours says 4 hour. I see 4 hour highlighted up there at the top left. So those are the candles. So it looks like might be 60-day 4 hour chart. Hard to tell. This is trading view.
Going back into trading view, yeah. It's going back into last year.
Looks like August of 2020. No, I don't know. That's 7/14/21.
Maybe it's the 180-day 4 hour. I think that's what Kyle said. 180-day 4 hour. Anybody remember that?
Well, this one on my screen is 180-day 4 hour. So what I'm seeing on yours looks like it's starting, like your chart time frame looks like it's starting somewhere.
Well, if I shrink
in
mine
this
out,
area.
I can see that. If I roll it back, I can see what you have there. But when I
Oh, I
zoom
see.
in to where I want to see on the tip, if I roll all the way out, I can see it like that. It looks like a
I got you.
dragon.
Okay. So yeah, this is the 184 hour.
That's what I'm gonna call that, a dragon blowing steam.
So you want me to draw out support and resistance?
Yes. On mine, all those blue lines are areas saying that I felt like it was being supported and resisted.
So let's see. So everything I put arrows on is going to be support. The things that don't have arrows on are resistance. I could do this one too.
Arrows equals does not.
Arrows equals support. Non-arrows is resistance.
Got it.
So this is what you're looking at here.
So when you first look at a chart, like something that you're not familiar with, and let me put some support and resistance here. How many are you actually looking for to throw on there at like the first glance to like just kind of get an overview of like, all right, I can see some stuff now?
It depends on the chart, right? It depends on history. Let me use this one as an example since it's got a ton of history. So this stock I know very well. So I know 42 is a high price. I don't even honestly have to chart it. But I could say if I'm at a 30-day, I already know for a fact that the range on a 30 days is 41 to 43, and that's not really that's not something I'm looking for, right? But what I can do is I can draw support, and I can draw resistance, and I can tell these lines extend to the left, extend to the left, and then I can go out to the 60. So I'm at 30 right now. I'll go to the 60. Say, oh look, there's a channel, and those lines they line up pretty well, right? So now I can start drawing out squares or rectangles and say this area is strong support. This support, and this resistance area that I drew, well, that's resistance. Then I look over here and say, all right, looks like we got pretty good resistance there too. All right, and here's another one. I say, all right, I've established support and resistance areas, right? Well, let's go further out. 90 days. Oh, okay. Here's a big difference. All right. So you see a big difference like that, then you're like, all right, I already know off the bat that this area is weak support, right? Because there's guaranteed nothing to the left other than right here, actually. Take that back. There's only two spots for support, and it's in an uptrend, right? So it didn't do like a downtrend and then reverse and become an uptrend. It's just an uptrend, had some retracements, and kept going. That's weak support. So then what I would do is, all right, I already know that this channel that it's been traveling inside of, that's just kind of a consolidation area, some kangaroo hopping around, but it's not a low by any means, and it's not a high by any means. Maybe it's a high, but I definitely know it's not a low because there's lower over here. Then I go to the 180. Oh, okay. So this 33 is the low. All right, so then I draw my drawing on top of it. All right. And I say, all right, let's go to the left. Let's draw to the left. Boom. Now I see multiple areas of support. All right. Multiple areas of support. Now that looks a lot stronger than this, doesn't it? Wouldn't you agree?
Yeah, definitely.
So then I say, all right, I got the 180 out, so that's 6 months. Let's check out the 1 year. Oh, okay. Those 3 support levels hold up because this is COVID, so we know that that's probably not going to happen again. Right, so then the next thing you got to ask yourself is, if it breaches this first support level, where does it go? It goes to the second one. If it breaches that one, where does it go? Most likely down to this one. All right. Here's another thing you can pay attention to is the support level that I'm seeing here. Has some more area right here that I would consider as being a support level. So resistance acting as support for these 2 areas. Right, so that makes this line a little bit stronger, right? So that's how you gotta analyze the whole entire time frame and see everything. Like, and when you draw everything out and you plot all the points, then you can start looking at the current price and say, all right, this is not a strong support level. Even though it's got multiple levels of support, the chances of this breaking through, I think, are likely. The chances of it breaking above where it's at, it could, but because I know this stock, I know $50 is pretty high. All right, so let's see. See that? $50 is the high, 51. So I already know for a fact that's a high price. So now one thing you can look at is, now that we're 5 years out, you can draw a trend line from this COVID low. Boom. So now I've established a different, let me redo that. Now I've established a different way to understand where we might come down to. Right, so now I'm going to get rid of all of my price levels. If this comes down, it could hit this trend line. Now, how long does it take to come down and hit this trend line is the question. If it comes down drastically, it'll come down a $35 area, which I think is a good area to get in. If it takes a while, it'll probably touch the $38 area. All right, so the trend line is powerful here, because when you look at the overall trend on 5 years, and you can see here, let's see, let me see if I can draw so middle of the year, I expect this to slowly come down and touch this bar somewhere. Right, so there's a lot of analysis goes into it, and you can start at the short time frame, go all the way out until you start to really find something that's nice and concrete. And I would say this is really concrete, because I've determined multiple levels. They're all kind of weak, maybe some strong, could argue it, but in my opinion, this is probably the strongest thing to look at. All right, and if let's say for example the stock comes down and touches this area right there, that to me would be a strong bounce. I would say if it intersects with both price level and the trend right here, or relatively close to it, it's a good chance it's going to bounce because the trend is up, it's on a support level, so that gives it multiple areas of strength. So when you look at support and resistance and you go back in time and you look at multiple levels, look at trend, this is why I say there's multiple confirmations, there's multiple checklists in this type of analysis, because you can really look at it and dial in and say, if it does this, it does that, and it does this, and does that, and because of this, and because of that, then all these things check out. And if it meets at this point, it's a good chance it bounces. Right? And the whole time, I didn't bother looking at MACD or true momentum at all.
That was a pretty damn good explanation.
Thank you very much, Asa.
How far back would you think data matters, or is it infinite? Like, I mean, if we're talking like, 15 years ago, 10 years ago, like, is that data still valid?
It is. It just depends, though. Like when you go far enough back to where you can see big lows and big highs, or strong lows and strong highs, like these two.
You kind of work between them, kind of.
Yeah. Like so, I'm pretty sure it's never going to hit this low level, and it may hit this top level, but this stock travels in this range, right? Let me go further out, 10 years. You see, I mean, it pretty much, out of this whole entire time, I'd say, let me draw that. I'd say 10%, if that, was below this bottom line, and majority of it was above it, and then I'd say half of it is in an uptrend. I mean, got to average out a lot of stuff. That's the thing. Like averaging out things with percentage and intersections of stuff, support and resistance and trend and that kind of thing. It really goes a long ways to help you determine where's a good place to get in, where's a good place to get out, where's a likely place it's going to bump, pop. So
yeah. So I mean, with this stock that you're doing this with, it's kind of, it's stayed within that range for most of its life. How do you do it with, like, I know we looked at this earlier, but like Run, so Sunrun, the solar company, like, it traded really low for a long time, but it shot up recently just because it's growing, like, so if you were to do that same type of analysis there, then it's going to be sharp, like this thing's going all the way up.
Well, a different kind of analysis has to go into something like this. Right? You can't do the same type of analysis as I did on Exelon. So this one, like, it's at a high, right? And my train of thought, when something is at a high, it's got to come down, right? And especially if it just languished for 1, 2, 3, 4, 5 or so years, languished, and then just recently it popped. All right, so that tells me that there's a lot of speculation. There's a lot of hype and FOMO happening. Look at this MACD. That thing is as wide as it's ever seen. Look how wide that thing is. I mean, that is huge. So just based off of these two indicators and the fact that, so here's four things that I use right now that I would use off of this. All-time highs, very recently. Third standard deviation channel, very recently. MACD is completely wide. True momentum is in overbought territory. All right, so then what I would look at is, well, when it does retrace, because I guarantee you it will, what does it retrace at? So you can chart out a bunch of possible points. All right, so let me get rid of this. So you chart out possible points, 50% retracements for favorite, so 50% is $53. How far is it from 53? It's at 71 right now. Good chance it could come down to it. All right. What's the chances of it hitting 78% Fibonacci line? Well, that's $27. Pretty unlikely in my opinion. 61.8, that's 43. Still somewhat unlikely in my opinion. I think this 50% retracement at $53 from 71 where it's at, that could happen. Right? And in an uptrend, you'll generally see it touch these Fibonacci lines, right? 23, 38, and 61. So there is a chance for it to come down and then bounce back up. Nothing keeps going up. Only Tesla. Everything else comes back down, retraces, finds a support level, and then bounces again. Only Tesla just goes to the moon. And even that, at some point, will fall. It will retrace, and I guarantee it's going to be drastic and fast. And then it's going to bounce right off of it and continue back up. Retest its high multiple times until it finds something else that it wants to break it out, and then there it goes again to the moon. Right? Typical behavior of Tesla.
Interesting. That was a good explanation too, man. Thanks.
You're welcome. And Cal uses Fibonacci extensions. I don't really care for them because I feel like it's more speculation, especially when something's at a high, and especially with my fifth confirmation or checklist point is I think we're going to have a retracement in the market. So, I mean, look how huge this wick is. That's insane. Insane huge wick.
Yeah, it's massive.
So I have another solar company that I've been watching. This one, CSIQ. So if I look at the Fibonacci on this one, %50 on this is at 39. It's at 57. Very likely. Other thing that makes this strong is it's got resistance over here that's supporting it on the 50%. So that just adds to the strength, right? So you've got this right here, and this whole entire section. That will be support, 100%. Look how wide this MACD is. That thing is huge. Look how wide. Well, look what happened when it was that wide last time. Huge fall. So this one, again.
So if you put that Fibonacci on the first big spike, could we see that play out?
Right here?
Or did it not happen there? Yeah.
Well, let's see. So yep.
So it did 50, right?
Yep. Boom. Bounce 50. Jump back up. All right. So that's the only way you can use this. So one wave came down, bounced off the 50, jump back up. Now you got to get rid of it. And then you got to start from here and draw that one. Right. That one is way bigger of a drop. That one's 100%. Same thing with the next one. This one's more than 100%. So when you draw a Fibonacci, you got to look at the wave itself. Just one wave individually. You can't look at multiple waves after the one you just looked at. So like this first one, yeah, you can look at that one. But these next two, you have to draw separately. And the one thing that really stands out to me, so I wouldn't draw Fibonacci's on these just because I can look at them and tell there's a downtrend, right? on those two. And if I go to the body themselves, right? And you see here, when it broke that trend line, it broke it with strength, right? This candle right here, it broke it with serious strength. But then what it did was it hit a high and then created another downtrend. The next time it broke that trend line, it crushed it. And it broke multiple resistance levels. So I expect there be a 50% retracement here, at least. It might not be like this, like it might be something like this, right? Where it ripped up 50%, jumped back up, and then just started getting crushed, right? So we'll see. I mean, see, that was during Obama's years. So 2013, 2014, 2015, and then 2016.
Trump years.
Yeah, so Trump was January 2016, kept falling and languished. Right, and the reason it languished because he was pushing fossil fuels, right? And now that Biden's in, look what it did. Same thing. Same thing it did when Biden was VP. A lot sooner though, mind you.
Dang, that's crazy. That's crazy to see that. It's because that's probably exactly what happened. He got in the office, jumped up, and then it just kept going down, stayed down. He comes in the office again, jumps right back up. So it's probably going to do the same thing, just go all the way right back down.
Yep, it could very well do that same exact trend there. And, we'll see what happens, but I guarantee you gas prices at the pump, they're going up.
Yeah. I mean, I think solar's.
I mean, solar is growing, and if they put enough research into it, they'll get the value to be worth more to people. I mean,
yeah,
if they put the research into solar cells and the production and all these other things that would make it cheaper, it's going to get cheaper. I mean, think about this. I got a friend that lives in New Zealand. For him to have 8 kilowatt system, it cost him $5,000. But 8 kilowatts here in the US is 20,000.
Jeez.
So think about that.
I know the stuff to make it is kind of a pain in the ass.
It's also it pollutes. So the process of creating and decommissioning solar panels is high in pollution. It's a lot of mercury. Mercury is one of those things out there that it takes a long time to dissipate, and it can pollute everything. So
I think I recently just saw a stock that somebody mentioned it here. They do mercury recycling or the recycling of the batteries from solar and crap like that. I don't know. I forget what it was.
Well, Tesla's doing their own recycling on the batteries, or will be very soon. So
yeah, that's cool.
There's that. But they're coming out with solid state batteries soon, I think, and that's gonna put Tesla in a corner, in my opinion. Toyota right now is developing solid state batteries.
I don't know that. I don't know what that is.
So instead of think of like a hard drive in a computer.
Yeah, I know the difference in that spins and doesn't spin.
It's very similar. It's very similar. So there's a coil in regular batteries. So it's like this copper coil that's spun up into okay. So with solid state, the way the electrons and the protons or whatever transfer between one another, it doesn't use the coil. It just uses it's very similar to how a solid state hard drive does, where it doesn't have to use that core. It uses I forget how they explain it, but it's when I watched the video, or I watched multiple videos, it reminded me of a platter hard drive versus solid state hard drive.
Yeah, that's cool. Yeah, I never even knew that. It's seems like it's good.
Yeah, it'd be pretty cool if they do it. I mean,
Yeah.
I just don't think they've done it because they don't want people to get things that are going to be they're going to last forever. They're going to give them, you know what I mean? Like they want us to
You only have to
consume.
buy one.
Right. They want us to consume. That's where they
Yeah.
make their money. So if we're not consuming, they're not making bank. That's why
Yeah,
we've
it
been
makes
driving
sense.
fossil fuel cars since Ford came out with their Model T. Been driving that shit since 1900s, early 1900s, because they know we can make these people buy coolant, buy oil, buy radiator fluid, or that is coolant, buy power steering, and you have to constantly change your oil, constantly change oil filters. Every once in a while, change spark plugs and wires. Every once in a while, do a coolant flush. Change your brakes, change your tires. I mean, it's a consumption vehicle. The whole concept of it is consume, consume, consume. Oh yeah, and did I forget? You got to put gas in the fucking thing every damn week. It seems.
And you got to pay a big price tag to get something too.
Right. So it's just
Right off
multiple
the bat.
avenues of getting screwed. Ask yourself why there's no high-speed transit, like a rail. Like Europe has them, Japan has them, China has them. I don't think Russia does, but those rich Middle Eastern countries, UAE has it. Saudi Arabia is building a hyperloop with, I think UAE is Dubai, I believe.
Yeah, it is.
They're building it. Well, why aren't we? That's why.
Musk is trying to.
He's trying, but
Yeah.
He's getting pushback because the government's bought and paid for by these people that are
Yeah,
making
man.
money off of all of us.
I don't know. It makes me happy that Elon's out here calling people out, the richest man in the world out there yelling at people. Great.
Well, that's the thing. Money is power, and he's got both.
Yeah, but he's on the right side of the argument most of the time.
I'm worried for him. I'm worried for his safety.
I'm sure he has bodyguards. I don't know.
Who knows? I mean, if
I mean, if I was the richest person in the world, I fucking sorry.
well, the whole cabal, the elite New World Order, whatever the hell you want to call them, Illuminati, if they want you dead, you are dead.
Yeah.
Right? So he's got to tread lightly, in my opinion.
Hostile, you said something about the batteries being recycled for the Teslas.
Yes.
Because if the batteries were not recycled, we would just have a huge pileup of electric vehicle batteries over time, and that would become a huge pain in the ass.
Of course.
Yeah, that'd be huge because I think the EV market wouldn't go well in the long run if that were the case, and they weren't able to recycle those batteries.
Well, that was the
Sounds
case
like the
recently, right? I mean, until Battery Day, where Tesla talked about recycling their own batteries, that was the case. There were things where when Tesla first made their vehicles, past 5 years, they've been in the market for 10 years. In the last 5 years, when people started to get rid of their Teslas because they're coming of age, or they put so many miles on it, and the batteries are only doing 20 or 30% charge now. It's basically time to get a new battery or new Tesla. Those batteries, they don't go anywhere. They're hard to recycle. So what people were doing with them was instead of throwing them away, they would sell some or give some away to people with solar panels so they could store their solar power that they produced into these old batteries that still gave them 20 or 30% charge, right? And they'd have them strung across their garage floors, and they'd have. I saw videos. It's been a while, but I saw a guy on YouTube that had 10 of them, and he was able to run his house off of 10 of those batteries that only held a 20 or 30% charge for an entire week. He was kind of
Wow.
an off-grid guy. He didn't really use a lot of power, but he, again, still a feat, right?
Yeah.
Yeah, that's crazy. Usually solar backups only last like, if that.
Yeah, they don't last very long, but those Tesla batteries, I mean, you gotta remember, they were meant for cars, and they were meant for things that are supposed to last a long time, much longer than those trash batteries that are supposed to be for battery banks. That's why Tesla's Powerwall is so phenomenal, because it is the technology of the car. It's just a scaled down version of it, right? It's not. It's not like so the P100D or Model S. The 100 was 100 kilowatts. The P90 was 90 kilowatts, right? So I think like the Model 3 was a 75 and something like that, right? They've since upgraded them, and I think like the Model X was 90, and now the Model S is 110 or 115, right? So the technology is increasing, but when you look at the type of battery, like so the Powerwall, it's like way smaller than the car battery in Tesla, and it does like 15 kilowatt hours, I think is what the number is now. So it's basically just a fraction of the car battery. So once they improve their manufacturing and put the new cells in their new batteries and all that stuff, that the range is going to go up for the cars. It's going to be cheaper to own the cars, and the Powerwall itself is going to be cheaper and hold more power, right? So that's kind of where they stand. But instead of those car batteries taking a long time to recycle, or somebody using it in their garage, now Tesla's like, give it back to
Yeah.
us.
We'll reuse them.
Yeah, we'll
Those,
use them.
those Powerwalls are dope. Have you ever seen one? The app on them is crazy.
Yeah, it's pretty badass. I mean,
Yeah.
if I was rich and money wasn't an issue, I would have Tesla fucking everything. Tesla
Yeah.
shingles,
My
Tesla
friend put one in his
Powerwall,
house.
Tesla cars. I mean, because let's think about it. I ain't got to put oil in my car no more. I ain't got to put gas in it no more. I don't have to damn change this fluid or that fluid anymore. I mean, a lot of people don't realize, and there's folks out there that trash EV cars like, oh, you guys are hippies. I mean, you got nothing to do with hippies. When I look at it, I think about how much money am I saving? How much time and hassle am I saving from not having to do all this BS maintenance every 2 to 3 months? How much
Yeah.
time do I save when I don't have to go to the gas station? I just go home, right?
I got a good friend that he's a mechanic, and he's his thing is BMWs. Like he loves BMW, but he's like, man, my everyday driver, it is a electric car. He has like a Leaf. He's like, it's the greatest thing. No maintenance, no fluids at all, none.
Right,
It's like
right.
windshield washer fluid. He's like, it's the greatest thing ever. He has a Powerwall in his house too. He has also, yeah. He's like, greatest thing ever.
Yeah, I mean, really cool thing about Powerwall, even if you don't have EV cars, if you live in a state where electricity costs crazy and you're always using it, the Powerwall, you can tell it to pull from the grid, at off-peak hours, right? So let's say, for example, midnight till 5 a.m., let's just say that's off-peak hours. You can tell that Powerwall to pull from that. And then when on peak hours, so 6 a.m. to 11 a.m., let's say that's on peak, you can have the Powerwall, the house use the Powerwall from that time. So
Yeah, so
you're
you're
basically
only pulling
swapping the
electricity
time
when it's
frames.
cheap.
Yeah.
Yeah.
So I mean, there's a lot of really cool things about it, and it just irritates me when people say, "Oh, you're a hippie," because no, I'm not a hippie. I'm just thinking about finance. So you're a
Smart.
dumbass.
It's logical to me.
Yeah, it's completely logical. It has nothing to do with trying to save the world, because me, myself, and we're not saving the world, right? It's just not going to happen. So I'm going to do the most logical thing, which is the thing that's the least path, the path of least resistance. And I get to save money. I get to not have to do all these stupid ass maintenance things. I mean, hell, even the brakes last longer on Teslas because they have regenerative braking. So, like, I drove my friend's. He's got a Model 3, and I let off the gas. It slows down for me because it's doing its regenerative braking. So there's a thing in the car where it slows itself down, and it charges the damn battery while it does it.
That's tight.
Jesus.
I mean, the lowest base Tesla isn't that expensive if you consider like after like incentives. I mean, I think it's like only like 35 grand. I mean, I know it's a lot of money, but for like a Tesla, I mean, not really.
Well, when you look at a Model 3 long range version, right? You add all those, you factor in the incentives. It's the same cost as maintaining a Honda Accord.
Really?
Yeah, it's the same price. So you can buy a
Over
Honda
time?
Accord, yeah, and maintain it over time, and it's going to cost the same as owning a Model 3 long range cheap version.
Yeah, but I feel like that's kind of how like logic that is 100% true, yeah. But like they kind of trick you with that, like because especially on the website, like when you're looking at it, they give you like the price of like after state incentives and after the money you save on gas. This is how much the car cost. It's like,
Well, yeah, that is misleading for sure.
I'm not really saving money on gas as soon as I buy this car. Over time, yeah, I understand, but up front, nah, not really. So
Yeah,
yeah,
no,
it's kind of
the
trickery.
thing that I factor in that they don't factor in is how much time do I save from having to drive to the mechanic shop and sit there and wait for these
Yeah,
assholes to do work on my car, right?
yeah, because
No
that
one
is a
factors
savings
that
over
in.
time.
Yeah, total savings.
Yeah.
I can be doing other stuff.
But I mean, yeah, you
Do
can get
that.
into a Tesla. I mean, even not even the long range. I mean, for like 30 grand. I mean, it's tight. I want one. That's gonna be my next car.
I don't really care for the Model 3. It's a little bit small for me. I want a Model S, to be honest with you.
Yeah, I mean, I would get it as a second car. I think Jeep.
When I do get a Model S, that's going to be my daily. And my wife she says she wants a Model Y, but I know she wants an X. I'm not stupid. So
X is the gull wings, right?
yeah. So it's going to be a little pricey. I mean, the
Yeah.
S and the X are the luxury versions, basically, of Tesla. They're the top, most expensive models, short of getting the performance version, right? So there is that. But the S and the X equal out to like a $45,000 car over time, right? So
That's pretty good.
and the cars that cost $45,000, they're not good on gas. So we're talking about like 335 BMWs or like my Infiniti. I got a Q50 Red Sport. If I bought that used, right? Because that's actually brand new is 63,000. So I could have got a damn Model S for another 10 grand, which is what it costs today, and it would have cost me over time half that, right? So like my oil changes for this car, it's 6.25 quarts of oil.
It's expensive.
Well, not only is it expensive, I use AMS oil, which is like top of the line synthetic. So each quart is like $12 damn a quart.
Yeah.
Right? Because it's got twin turbo, so you got to put good oil in it. You got to put 93 in it, guaranteed, right? And when it's time for maintenance, to do spark plugs on it, it's $700.
Jeez,
You
I
know what
know
I'm
the
saying?
feeling.
Like it's insane.
I used to have a Hemi 5.7 liter. It is expensive to keep up. When I got that first spark plug bill, I was like, "Geez, really?" Like,
Well,
yeah,
and that's 8. That's 8.
yeah,
That's not 6.
yeah.
I mean, and then when you think about like BMWs or Mercedes, you can forget about it. Like them old 300ZX, Nissan 300ZXs. Those things were even worse. You had to pull the engine to do spark plugs.
Sure.
So And then you think about, all right, well, I can go home. I get my Model S or whatever. I'll go home, plug that joint up. I can tell it when to charge, what to charge up to, so that I can maintain the life of the battery on top of that. And then if you're like me, where I work from home and I don't really go anywhere, my wife's the one that drives around. You don't use electricity anyways. So, my gas bill every month's like $200. That's nothing. Most of the time we got a Honda Accord. She drives that. If either of us has to go anywhere, that's mainly the car we drive. If it's like depends where we go. If there's a place you have to park in a parking lot, in a public parking lot, drive the Accord.
Yeah.
If we're driving around, gonna have dinner or something, or pick up food, I'll drive the Infinity. But my gas bill is never over $250 a month, right? And so if I were to get a Tesla, that would go down even more.
Mm-hmm.
And when I go to charge my Tesla, it's going to happen during off-peak hours.
Yep.
So,
would you ever buy a used Tesla?
So my daughter's allergic to dogs, and I'm just skeptical about people. I know people put their dogs in cars, and there's people out there that got a lot of money. They could care less if their dogs tear up the car and the dander gets into the vents and stuff. And
hypothetically, if she wasn't, would you buy a used Tesla? I feel like I go back and forth on it. I'm like, it's weird buying like a used. It's almost like a secondhand electronic. Like I don't know. It's like just weird. I mean, I know there's but
I'm on the fence about it too. I mean, I've always bought new cars anyways, so for me to think about buying used, I'm kind of just like,
yeah. I've always been the opposite. I've always bought used cars because I always hate that. Like, as soon as you buy a car, it just drops in value, like instantly.
Yeah.
And it's like, although last time I bought a car, or when I bought my Jeep, I got a really good deal. I actually found it. I was looking at used ones, but I found a brand new one cheaper, just because it was like the weird transition between the JK and the JL. They were trying to get rid of the JLs. So I found it really cheap, so I bought that new. But I'm always
that's the only thing that I mean, so here it's a opportunity cost, right? So yeah, you lose major value as soon as you drive it off the lot, but you get a peace of mind knowing that no one else drove it before you. It's in pristine shape. It's going to last as long as you make it last, right? I mean, there are all those things that to me are almost as much as worth as much as how much I lose when I drive it off a lot. Now, my Infinity, I was considering selling it a year ago. I mean, it's 2019, so I would have sold it a year into owning it because I wanted a Supra, right? And not the new one. I want a
old school
MK4. So, and my wife was like, "Yeah, go ahead, do whatever you want. I don't care." So I'm like, "Sweet." And then I went to go sell my car. I paid $63,000 for it, and it was worth 46 in
1 year later.
1 year.
Yeah.
So almost $20,000 down the drain. So that right there, that's when I started thinking about Tesla. 'Cause I'm like, well, if I'm going to buy a brand new car, number one, Teslas hold their value pretty well. And number two, there's no maintenance, right? Hardly any. So I'm like, oh, shit, man, I got to stop doing this gas guzzling cars. They're just throwing money away. I mean,
it's fun though.
I mean, look, trust me, I know it's fun, especially when you got a huge ass turbo that whistles like an airplane, and that's what I would love to have at some point in the future. But I think when I'm finally ready for it, it's going to be so obsolete that, I mean, a Model S Tesla crushes majority of cars out there.
I was just going to say Teslas are quicker than anything out there, or at least.
Yeah, I mean, unless you're racing a top of the line Lambo.
Yeah.
And even then, it struggles.
The limits. Yeah.
Struggles to win. It wins, but not by much.
I mean, people take them to drag strips and they just crush cars.
Right. But it defeats the purpose of a fun car, right? It doesn't make
Yeah.
the nice, awesome
Yeah.
sounds.
Yeah. I mean,
Right?
if you're like a car guy, then you like want to shift and you want to feel the car
Right.
and all that.
Yeah, you want to shift, you want to feel the
Silent
car, you want to
Kennedy.
hear the blow-off valve explode into the atmosphere and the turbo wind up and whistle at everybody, these windows there that are down when you're passing.
Yeah.
I mean, I used to do that, right? I mean, I had multiple turbo cars and I'm driving by somebody's window and I just give it like 25, 30% throttle. It's like whoosh, and then they're all looking sideways like, what the hell is that? And then I go whoosh, or whatever the blow-off valve made.
Yeah.
And most of the time, people are like, wow. I know I'm like, wow. Somebody's doing it past my window. I'm like, yeah, hell yeah. Right? Because that's just my thing. Right? I do that kind of stuff because I like to do it and I like to hear it. And if Super drove past me making that kind of noise, I'd have been like, thumbs up. I assume there's people that don't like it, but
Yeah.
car
Cars are
guys,
fun.
it's fun stuff. But when you think about practicality and logic, it's the worst thing you could possibly do is hook up your car and throw money at something that depreciates in value.
Most of the
you
time
guys,
it does.
you guys know Elon got jokes, right?
Oh yeah.
Because like with the whole Tesla thing, when I found this out, I thought it was like the craziest thing. And that's when I wanted a Tesla too. Is all 4 models, they spell out sexy. You guys probably knew that already, but
yes.
Model S, Model 3, Model X, and then he came out the Y, and then it's like kind of like an inside joke. He's like, "Oh, Tesla's sexy" and all that stuff.
I had no idea.
So yeah, that's their model. It's Tesla sexy, and then it's really funny because they came out with the tequila too recently, which sold out in like the first hour or something.
Everything that he comes out with, whether it be the flamethrower or the tequila,
I wish I bought one of those flamethrowers.
You know what it is, right? It's just an asphalt burner.
Yeah, but I mean, it's just cool as shit. And they were selling for like $4,000 on eBay.
That's crazy. You could get an asphalt burner for like a few $100.
Yeah, I have one in my garage.
Sure beats the PS5. The upsale.
Don't they put like video games in their dash too?
Yes.
Don't they all come with video games?
Yes. They even got a car game that you can use a steering wheel to drive. Obviously, you can't do it while you're driving, though. Got to be parked.
There's a campfire mode too. You can have like a mini virtual fireplace.
Fire, yeah.
Yeah.
That's funny.
It's wild.
That's crazy.
The thing that it really stood out to me with Tesla was like the Model S. If you lay down the back seats, you can put like a full-size bed in there.
What?
Yeah, you lay down the back seats, bro. You can put a full-size bed in there, and like my wife and I were talking about, like we could travel across the country doing that shit if we really wanted to.
Camping.
Yeah, you don't even need a hotel. Screw a hotel. Like, you know how with a regular car, if you leave it on all night long, you eat gas and it messes up with the alternator, and just all kinds of problems can be created if you let a car run for an unlimited amount of time. With a Tesla, it doesn't run.
Just electricity.
Yeah, it's just a fucking battery, and it's not the kind of battery that dies and never recharges. It's like if you leave a car battery on and you got the alternator on, I mean, alternator is gonna die, right? So you're screwed. But with the Tesla, I mean, like there's I watched a bunch of videos on people, doing camping mode, and I think they said they use like 2% of their battery to let the car heat or cool the inside of the cabin for the whole entire night, right? And that's basically nothing. 1 or 2% loss in battery from doing that. I mean, imagine had you let a car run for a whole entire night, you got a quarter tank of gas gone.
Yeah. The only thing with Tesla is, or any EV car really, if you run out of screwed. It's like how do you get power to your car? Like you have to bring out like a generator to you to charge up your car.
Well, yeah,
Crank up a gas generator.
that's the thing is, you can't allow it to get
You
there.
got to be smart about it.
Yeah.
But let's be real, everybody's not smart.
There's idiots born every day. But yeah, that's next stuff for us, man. As soon as my Infinity levels out in loss, and I can sell it for what I owe, it's gone. And I'm getting a Tesla.
Treating it like a stock.
Screw that. I mean, my wife said she wants a Model Y, but I know she's looking at Model X's. I've seen it. So we'll see. It's going to be her first. I got to have my car before she got to have hers, so it's her turn.
I
So
want to make it my second car.
I mean, I'd like to keep the Infinity. It's a really pretty car, and it's quick for what it is. It's quick, fast luxury car.
Yeah.
I mean, it's faster than a lot of other luxury cars.
I've always been more of a four-wheel guy.
The funny thing is, the Model Y performance is the same 0 to 60 as my Infinity.
Jeez, your car's quick.
Yeah, stock to stock it is, but mine's got a couple of parts on it too, so it's actually faster than stock. Boost controller, downpipes, exhaust.
Jeez, you do all the work yourself?
No, I don't have a lift. When I had access to a garage, I could do it.
Yeah.
I used to be really good friends with a guy that owned a performance shop, but since COVID happened, they kind of went down the shitter. So he's not really doing anything anymore. And now, like, my brother-in-law owns a car shop, but he's kind of sketch about letting people work on their cars. So he says liability, this and that.
Yeah,
so I'm like, all right,
sure.
whatever, man, I get it. He gives me a good deal. So I mean, to put the up pipes on, he only charged me $120.
Yeah, that's not bad.
Every other shop was talking about $300. And he did my exhaust for $100, and a lot of other places like $250, $300. So I'm like,
Yeah.
he
It's a
hooks
good
it
deal.
up. Yeah, he hooks it up. And I told him at some point in the future, man, not coming by no more.
Don't need to.
Nope. Except to do brakes. Every 60,000 miles, I'll do brakes. If even.
Have Tesla service shops started Tesla? Like third-party service shops, like third-party EV places?
There are some, but not a lot. It's kind of like in its infancy.
Yeah.
But there are some. I've seen them here and there, random. I mean, on the internet, on YouTube, I've seen it. Like, I haven't actually went to search for it in my area.
Yeah, I've seen that. I've seen that the guy that
Yeah, there's a guy that rebuilds the generator thing.
Yeah,
Seen him
well,
take it apart, and it's pretty cool.
there's a dude that ripped he buys wrecked ones and rebuilds them all. Like he redoes all the wiring in it. And it's crazy.
Not a bad idea, especially if you can find a way to make money off of it. But it's a lot of work, man. Ever since I discovered stocks, I'm like, I don't want to work no more. Serious. Like, my job right now is pretty kosher. Like, I don't work all that much. I do 4x10s, and the type of shift that I work, second shift, like, we can't do work until after 6 p.m. So basically, from 1:30 to 6 p.m., I'm not doing anything other than maybe joining meetings or random menial work.
Yeah.
Tickets that I do are after 6 p.m. till 11. So I've got a limited amount of time for that. So like, I work from home. Like, even before COVID, I worked from home. So I'm chilling really hard.
Yeah, that's kush.
So I can't complain. But even now, I'm like, man, I gotta log in to work. I gotta log back in.
It's dread, man.
It's just because I'm making all this money doing stocks. I'm like, this shit's for the birds, man. Working for someone else is a waste of time. It's stupid.
Yeah. And so you never ever pull out profits at all. You just leave everything in there.
Yeah, I don't touch profits. I mean, I have the luxury to do that though, right? My job pays me well enough to where I can survive
Yeah,
without
yeah.
any of that. So
Yeah. I mean, I mean, I'm pretty much the same concept. I mean, I don't need to take anything out. Yeah.
I mean, that's how you grow the account, and that's how you get self-sufficient when you got enough money in there where it makes more than your day job monthly. And if you have to hold a position or your money's stuck in the market for 2 to 3 months and you're able to make 15, 20, $25,000 in that time period, you're good now. Now you can quit your job if you really want to, right? But if you get a kosher job, why quit? Why not let it get
Yeah.
to 5 million to where you're making, $100, $200,000 a month or $500,000 every 3 months, right? I mean,
Just double dipping, getting paid to
right,
do your work and do stocks.
exactly. So that's my vote, right? That's what I do.
Yeah. Smart moves.
Just gotta do it
Pascal,
the
if you
right
don't mind
way.
me asking, how long have you been trading for?
Since 2009.
And you weren't trading options then, right?
No.
Yeah, options are like, I mean, what you guys do is great, but I talked to my friend's dad who he runs a financial company. He said you should read at least 5 or 6 books before you start trading options.
You don't even need to do that. You just gotta have a solid understanding of the concepts and virtual trade and practice and understand when people alert stuff, understand why they do it. Like just the understanding is what you need to have, right? It's not,
Okay.
read all these books, then you'll get it. You won't. It's like go to college, get a degree, and you'll be ready to fly an airplane, or you'll be able to be ready to be a manager. Bullshit. You won't be. You gotta have
But the
hands-on
experience.
experience. Yeah.
Yeah.
Nothing
Yep.
beats that.
Mm-hmm.
So you can read as many books as you want, but you're not gonna get it until you try it.
And I saw that the Fibonacci levels, are those like super hard to understand?
No, they're really simple.
Okay.
I made a video on it. You should check it out.
Is that in the Discord?
Yeah, on my Discord channel. Look in the pin tab, and it's 50% retracement, trend, and Fibonacci.
Awesome.
That's what it's called.
Thank you.
You're welcome.
Yeah, if I knew what I knew now when I was younger, I would have spent money on college. Nothing I do now. I'm self-taught. It's crazy.
I mean, my whole time that I've been going to college has been self-taught. Like,
Yeah.
it's all like online classes.
Yeah.
Nobody's
now
teaching me.
with the internet, like you just have everything at your fingers. I mean, some, if you want to go into like law, or obviously you need to go to college. But like, I mean, I'm a web developer, so I could have easily learned everything that I know from YouTube, from online. Buying the $50 a month online class,
Right.
all that stuff. I spent a lot of money at school in Florida, and it's like, yeah, I didn't really need to do that. I mean, fun. It's just a lot of money for something that I didn't really do.
Oh yeah. I mean, that's how it is a lot these days, right? I mean, like Linux. There's a linuxacademy.com. You can learn everything there is to know about Linux. You can even learn Python and JSON and Perl scripting with that linuxacademy.com. And they guarantee if you pass everything that they teach, you can get the Linux Plus certification, which is basically Linux, SUS, and there's another one. And they even say you can pass the Red Hat the RHCSA, and the RHCP if you take all their classes. And those 3 certs will get you a $100,000 job instantly.
Yeah, I really don't want to go to college.
I feel like the hardest part is like having the discipline to put your head down and do it, though. Because when you go to college, the structure's there, and they do the teaching, or they supposed to teach you in their structure and all that stuff. If you're on your own, it's like you got to do all that, and it's I know some people can do it, but I know for some people, like for me, it would have been a challenge for me to do that when I was younger. Looking at me now, I'm like, yeah, well, I should have done that, but like when I was younger, do I think I could have done that? I don't know, but it's weird.
Yeah, that's the one thing I wish I had a bit more structure to learning all this stuff.
Yeah.
Hey, Hostel. So you know how in 2020, options trading really boomed with COVID, right? Do you think that this will continue in the next 5 to 10 years, or do you think after kind of COVID fades away or whatever, when life kind of gets back to normal, quote unquote,
Well,
you think it'll kind of fade off and it'll be more like towards like the share side again?
Yes and no. So there's going to be those people out there that lost a lot of money and they're pissed off and sour about it and they're going to quit and never come back. Then there's going to be people out there that made so much money that they don't need a job no more. And then there's people out there that realize, you know what? This is a great way to build wealth, but I still need to work. So there's going to be all types of people that stay, go, and kind of be on the fence. So I see stock trading growing because, I mean, think about it. All the people that are on the server, everybody that comes to these lectures, if anything sinks into people, it's that you can trade stocks for a living and you can quit your job at some point. So who in their right mind would choose to work a job when they can trade stocks and chill every single day? Right.
I feel like what just happened these past couple days is going to intensify that too, because now it's all over the news that, hey, all these normal people are like trying to take on Wall Street, and they can. So now everybody else is going to be like, oh, why didn't anybody tell me that? Sign me up.
Well, here's the other thing is, a lot of those people that are chasing FOMO that don't know anything about stocks, they're going to get burned. So they're going to be sour, and they're going to be the ones that go back. While the people, like everybody that I would consider, I'd say majority of the folks in this server are here to learn and better themselves and not just get FOMO and try to bank, $100,000 in a day or some stupid shit. Right. So the people that are here, they're going to be the ones that continue to trade. Whereas the people that jumped in on that Wall Street bet and stuff, and then the next time Wall Street Bets throws out something where people get crushed, they're gonna be gone. Bye bye.
Yeah, exactly. I'm still in high school, and suddenly there are all these armchair market analysis that pop up on social media that are my age. There's so many people talking out of their ass about shit they don't know.
Oh yeah, all the time. I mean,
yeah. I mean, I recognize I'm very new to this, and I still have a ton to learn. That's why I'm not going around posting my GME advice, all this stupid shit. It doesn't piss me off, it kind of annoys me.
Well, I'm not gonna mention a particular person's name, but someone in this server DM'd me and was showing me an article that they made $1 million, and it's like all he did was throw money that he had at stocks that were pumped and memed. And he had 150K and made $1 million off of it because he just threw money at stocks and let it all sit there and turn into huge numbers because everything was at a low, right? And he just kind of closed his eyes and threw money at stocks. And now he's talking like he knows how to do spreads and sell options. And I get that you're successful or that you made success, but it doesn't make you a professional. Getting lucky doesn't mean that you were able to successfully do this in a way that you can continue. You can make another million. He
Right.
can't.
Yeah. This is just a flash in the pan.
Right.
There's gonna be nothing else like this, probably, but
Well, there could be. I mean, it happens all the time, to be honest with you.
something to this scale, right? What happened with GME and
Well, maybe not quite this scale, but there are
yeah,
things that come out where you get in low and at the right time and it pumps
right,
and
yeah,
you
yeah,
made
yeah, for sure,
big money. So, but just based off of what you're saying, how people are out there spewing their trash. I mean, it's everywhere, right? I mean, there's
right,
people in our server that think because they made some money that they're professionals now, and okay, we'll see
yeah,
how long your money lasts. I mean, maybe
right,
they get lucky again and buy something. It's hard not to make money when you're buying shares. It's really hard not to make money unless you get at a high and then it goes down, right?
right,
So it's literally impossible to not make money.
yeah,
It's just a matter of time, how patient someone can be.
right. Yeah, no, it's just all these. I know I said it before, but people on Robinhood posting their screenshots of some shit they read off Reddit.
Well, those are the ones that don't know shit, and they're gonna probably go and spend that money just as fast as they made it, and then they'll be back again trying to do the same thing. And
Yeah, it's not a get rich quick scheme.
right, a lot of people think it is, but it's not.
Right. Yeah.
Now, if somebody can tell me that they made $1 million over 5 years consistently trading a specific strategy, now we got something. Now I'm interested in what they got to say. But if they made, $1 million in a year because they were doing meme stocks, well, that actually kind of irritates me.
Yeah. Yeah, no, it's hard because I don't want to be like pessimistic, right? I'm kind of hating on somebody because they made money, but
Right, yeah, I'm happy for people to make money, but don't come out here talking about you know what you're doing.
yeah, I think that's the part, right? When you try to give your
Yeah.
insight and try and act like you know everything.
You hit the stock lottery.
Right.
Right. You got lucky. You invested in the right stocks. Somebody probably told you to invest in those stocks. Like,
Right. I mean, if you couldn't explain or understand the short squeeze that went on with what was that firm? I forgot the firm's name, but
I
they
forget what
shorted.
it's like,
Yeah, I mean, like that. If you can't explain that, then I really, in my opinion, you should be posting on social media how much of a genius you are.
Yeah, probably not.
It's whatever though.
well, I think a lot of people just want notoriety. They want people to be like, "Oh, good job, man.
Yeah, no,
Great job.
exactly.
You did amazing.
Exactly.
Congratulations."
100%.
Well, I think I'm done for the night. It's 1:40 a.m. So, good talk, everyone. Thanks for coming, as always. And hope to see
Thank you,
everybody.
Hostile. You have a good night, man.
Yeah, you're welcome.
Thank you
And
so much,
Yeah,
Asa.
thank you.
yeah, of course. And hope to see you guys and gals next Sunday.
See you.
Take it easy.
See you then.
Thanks, Hostel.
You're welcome.